Feeling good, ready to go? Man, we are chit-chatting this morning, aren't we? Bunch of chatty Cathys. Good to see you guys today. Hope you're doing well. Vittorio, Hamid, Ron, Paul, great to have you. We got Andy V in the house. Brian's back. Chariot showed up. Todd N, good to see you. Miss Jen, 10K, 8 ticks, Andy Man, Jerry, and Big Dog. Trying to cover everybody here. Good morning, guys. Afternoon. Jen, you get the afternoon. Everyone else gets the good morning. How you doing, Paul? Good to see you. All right, guys. What do you say we finish the week strong? Um, Starting off with news. Hey, John. Guys, we talked about it earlier in the week. I'm just gonna repeat. News isn't a decision-making tool for me unless the decision is to not trade. No news is good news. It's Friday, August 8th, guys, and every time I look at news, I'm looking for one of these red boxes, one of these orange boxes. And all it means to me is that the market could spike, that the market could jump, that the market could trade too fast to trade or move too fast to trade. So um, anytime I see that red box, I go toast a bagel or cook a waffle or make some pancakes or walk the dog or anything other than jump in front of the freight train of emotion. Good morning, Steve. So that's our first stop every day. Um, and then we're going to spend the rest of the day, guys, talking about charts. We're going to talk about what it means when you look at these charts. What are the indicators telling you? So when I'm looking at charts, and we're going to start with Renko, guys, but it's really the same for both. I'm looking for three things. And I've lost my pictures. There they are. I'm looking for the advantage of momentum. I'm looking to make sure that there's absolutely nothing in the way. And then I'm going to define an entry. And the great thing is that if you're brand new with me, hell, even if you've been with me for 10 years, you don't have to make up a plan to trade. You don't have to make up rules. You don't have to go back and take 40,000 pictures and find a pattern that wins more than it loses. We've done that for you. And we hand this trade off, and I teach this trade first because it teaches you to read your indicators. This is the recipe for a high probability trend trade, guys. This is a trade that typically wins up to 70 to 80% of the time. This is a trade that creates confidence through that memory of success, but I can't say this loud enough. This is a trade, more than anything, that is going to teach you to read your indicators. And I don't know how to make this smaller. There we go. Guys, chart reading. Chart reading is the goal. Chart reading is what sets you apart from the mortals, guys. Chart reading is about 90% of your day. The rest of your day is spent trading. So chart reading, guys, once you get through this, you're going to be able to recognize three things about the market. You're going to understand where the market is likely to continue. And when I say continue, I mean continue in the direction of an established trend. You're going to use this for trend trades. You're going to use this for momentum trades. You're going to understand where the market is likely to go. This is going to help you with profits. You're going to be able to say to yourself, with that advantage of momentum, with absolutely nothing in the way, that next key area is probably where they're headed. What a great place to put my profit targets. And then finally, you're going to understand where the market is likely to stop. And one of the huge advantages for Fibonacci, for these zones, for these areas, is that they are where the market makes decisions. They're where the tops typically end up. They're where the bottoms typically end up, and you're going to know about them long before you get to them. So we're going to focus on chart reading first, recognizing three advantages, finding a way to get consistent. Hey, good morning, Dip. Learning to just look at a chart and say, okay, I have the recipe for a perfect trade. And because you're going to teach yourself to speak in advantages, every time you look at a chart, you're not going to say, I wonder if I can make money. You're going to say, do I have momentum? Is there a clear path? can I define an entry? And if you do, this is the best of the best. This is when each indicator on every chart agrees with the rules for the trade. Um, and that is what we call a high probability trade. When one of your advantages goes away, whether it's momentum, clear path, or entry, you'll know through your chart reading something's not right. This is a medium probability trade. Perhaps I'll need to manage a little more aggressively. Hey, good morning, Andy. Maybe I'll need to get to a zero loss level a little quicker, take profits at whatever's causing problems for me. And then I think the best lesson is that you'll be able to look at your charts, once again, chart reading, and you'll say, man, I'm missing 2/3 of the good stuff. I'm missing that momentum that I love so dearly. And there's all sorts of crap in my way. Why would I look for an entry? Why would I take what is defined as a low probability entry? And that takes me to the next point, guys. The only thing that you will ever be in control of as a day trader is the entry. And when you know what's working for you and what's working against you, that's what's going to help you make decisions. That's what's going to help you decide whether or not you want to enter, how aggressively you need to manage. So it's fun to say, I'm going to be a day trader because that's how I'm going to make my living. Focus on being a chart reader first, guys. Focus on being able to look at your indicators and just saying, okay, I don't have what I need yet. Not quite. It's not perfect. It's not my trade. And we're going to go through and we're going to break this down. And I lost my pictures. There we go. So we're going to go through these 3 rules on NinjaTrader first. Entry and risk. Are you asking about entries and risk, or help me out here? Incomplete sentences always rattle my brain. You can control the risk. You can. You can control it because, and I see exactly what you're saying. You can control the risk. But let me get to simulator so that I don't blow out an account. So I could enter a market, right? And I control the risk by moving that little thing. But is that the right risk? Is that the correct spot for the risk, right? My risk will be defined by where the market shouldn't go, which means that technically I am, while I am going to put the stop in the place in the correct spot, the market and my indicators will determine my risk. And you'll see what I mean, Dip. We'll talk about that a little bit. I like that you said that. Because if I take a trade and I decide that the risk needs to be $200, that risk may not make sense. All right, I like this. I love this discussion. And when we talk about entries, I'm going to circle back to controlling the risk. Sound fair? Okay, by the position sizing. That's true. You could take 1 contract, 4 contracts, 8 contracts. You're absolutely right. You're in control of how many contracts you enter the market with. And risk grows exponentially with the contract. What a great reason to take the trades with the advantages, right? So let's break this down real quick, guys. And I'm going to go through and I'm going to remind you that the fastest way to get to where you want to be is to talk to me the same way you guys are doing right now. Post in the room, guys. Post your trades. Post your questions. If you're just looking at a chart and you're like, hey, Mark, what the heck are these lines? Drop it in the room, guys. We'll get you the answer. There's never any reason to wonder why. So simulate, practice, and post, guys. But do me a favor. Annotate your charts. I know how to read charts, guys. I'm really good at it. I can read charts quickly. I can read charts effectively. I've done a lot of study. This classroom is designed to make sure that you can read your charts. So tell me what you see. Talk about the momentum. Let me know if there was anything in the way. Show me your entries. And if you don't need feedback, if you're just showing off, write me a note. Just showing off. Look at the money I made, right? But my goal is to help you guys get so good at chart reading that your decisions are made in a fraction of a second. The second thing is use a spreadsheet, guys, and keep it simple. And when I say keep it simple, if you're on NinjaTrader, this is the KISS plan. And the KISS plan is designed to optimize your chances of success with first a high probability trend trade, the trade we're going to discuss, and then a second trade that allows you to take advantage of the market when the path isn't quite clear. Both of these trades come with a checklist for entry and a way to manage the trade most effectively. So um, when I say keep it simple, 2 trades is pretty simple. The second plan that I'm dropping in is for you TradingView people. And it's the same thing. It tells you exactly how you're going to use your charts. It's going to tell you exactly where your entries come from, and it'll give you a checklist to make sure that you're giving yourself the highest chance of success. So both of these plans were just dropped in the room, guys. And both of these plans can be studied over the weekend doing homework by using this trade tracking sheet. And for NinjaTrader users, it is strong triggers defined in pictures and annotation. It is a clear path defined in pictures and annotation. Same with the entries. And then it's also pictures of when your rules aren't met, when it's okay to sit on your hands and do nothing. Your TradingView trade journal has the same thing. What's it look like to have an HVA trade? And I'm going to tell you guys right now, the HVA trade is the least common trade. You're not going to see a lot of these during a day. You're going to see mostly trend trades and momentum trades. Learn the looks. And the checklists are on the spreadsheet, guys. The entry looks are on the spreadsheet. Ideas on management, ideas on terminations, when not to trade. So all of these are, like, all of these things are there for you to study. And then both of these spreadsheets have a tracking sheet on the back side. But the NinjaTrader one, because it's been around for years, has over 500 pictures of Nexgen users finding success with the software, taking the perfect patterns, utilizing the advantages. Go through and study them, guys. Commit those patterns to memory. Ideas on management patterns, but it's the trade tracking sheet, guys. When you take a trade and you annotate that chart, right, and you drop it in the room and you say, Mark, this is what I did. This is what I saw. I saw that momentum, and this had the potential to break, and I took a pull back to an area inside of triggers. You're writing a recipe to repeat that same process to find the success. And if there was a challenge, maybe you traded into a termination condition. Maybe you broke that rule on entry and lost a trade. You're going to see that, maybe not in your annotations in the beginning, but you're going to see it on the feedback given in class. So make sure that you're posting your picture into your spreadsheet. Talk about your advantages, what you saw in the moment, and then if there was a little correction, you're going to see it over here in feedback. And the one thing that this feedback section is going to do for you is you're going to begin to see the repetition of the things you do well. You're going to see where you repeat the same mistakes. And what it's going to do, every morning I encourage you guys, go back and look what you did yesterday. What worked? Well, for me, what worked yesterday was having momentum on my side and absolutely nothing in the way. And it made my trading very, very easy, and I was very relaxed. And what didn't work, well, I traded into some termination conditions, and it created a big bounce that pulled me out of my position. Or I tried to anticipate that entry on my 1 minute in TradingView. And because I tried to anticipate it, I never got a close on the correct side of the triggers. And then I just got run over, and I had to hope that the right trade made up for those losses. So guys, you're going to see this, and it's going to set you up for the day. So let's learn some rules and practice, 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 practice. I can't stress that enough. Ask for help. Raise your hand. Have a discussion. Keep it simple and take a lot of pictures, guys, because the more pictures you take, the more the lessons stick. The faster the lessons stick. The sound is a little bit skippy. Is everybody getting skippy sound? I'm checking all of my connections just to make sure. Yep. Let's do a quick little reboot. Hold on just 1 second. Let's see if this fixes it. 1 second. I'm like going to kill and just jump back in, guys. Sometimes Discord just messes with us. Can you guys hear me? A little better, I hope. A little smoother, a little less skippy. Awesome. Barely, Jerry. Sounds like you're letting go of the button here you find now. Okay. Jerry, is your volume up? Is my volume up? Let me see. Let me check where my volume is, guys. That could be a problem because I was making videos yesterday. Let me see if I forgot to put the volume back on the microphone. Oh, okay, so watch this. You guys ready? All right. Is that better? I just went back to my headset, guys. It was trying to pick up from my camera. There we go. I apologize. Thank you for telling me. Easy fixes, right? Easy fixes. You haven't had any sound issues yet? Don't worry, Todd. You will. Every now and then the sound just goes crazy. So guys, let's talk about the indicators that we're using. So we're going to do NinjaTrader first. Because the NinjaTrader indicators are 95% the exact same indicators on TradingView. You're going to have trigger lines. You will have small and large triggers. Small triggers are two lines working together. They're a fast-moving average. And then the large trigger lines are two dashed lines working together. They're a slower moving average. When they're going up, they're green. When they're going down, they're red. So trigger lines will show up in defining momentum. Trigger lines will show up in termination conditions and how to identify them. And trigger lines will show up in defining entries using a large trigger to define that rock star entry. So triggers are going to show up in everything. All you need to know is small and large. You're also going to see areas on your charts. Big chart, small chart, guys. You're going to see divergence highs. And this is a magenta line. And it's going to print from a pivot. A pivot means the market went up and then back down. If there was a loss of momentum at that pivot, you'll see this magenta line. It's just a little indicator. Hey, we're losing momentum. From a low, it'll be a cyan line. The negative number associated with the line is irrelevant, and it's just a byproduct of the calculation. You'll see Fibonacci resistance on NinjaTrader. It's a red line. It extends across. It can stop the market in an uptrend. Good morning, 10K. Is it just you on the audio? We did a reboot, 10K. Is everybody getting me loud and clear now? Well, everybody but 10K, I'm afraid. Yeah. Okay, it may be 10K. Ron, no audio. Ron T, reboot your Discord, please. We'll see if we can get these guys back in, because if everyone else can hear, it's probably not me. Guys, you're going to see Fibonacci resistance. Fibonacci support can stop the market in a downtrend. Yellow 1-to-1s are fibs that print in the moment. When the market is trending up, they can be resistance. When the market is trending down, they can be support. And then the midband is that squiggly line as it was described yesterday. This is a moving average, and it runs through the center of your chart. And when price is above it, it'll turn green. It may behave as support. When price is below it, it will turn magenta, and it may behave as resistance. So these are the indicators that we're going to work with, guys. And I want to show you, for TradingView people, TradingView has triggers. TradingView has divergence. TradingView has 1-to-1s. TradingView even has that midband. The difference in TradingView is you can have zones. Our programmers are working hard. We're hoping to have Fibonacci on here in the next couple weeks. But until then, you can use zones. And these zones behave the same as resistance and support. Guys, I'm going to do my reboot one more time to see if we can help 10K out. So give me just 1 second. I appreciate your patience, everybody. I really do. Sound as good as ever? That's not saying much. coming back, ladies and gentlemen. So hopefully this gets 10K in. I don't want 10K to miss anything. So we'll see. 10K, did that help? Fingers crossed. Most of you are good. You just heard my sound glitch. I did that for you, Todd. I did that for you. Appreciate that. Radio sound. I like it. I like it. I have a face for radio too, Dip. All right, guys. So triggers and areas. Awesome, Ron. Triggers and areas. Everything comes down to triggers and areas. So we're going to break down 3 rules real quick. Strong triggers are rule number 1. No terminations are rule number 2. Then we're going to define an area. So momentum is defined. I'm going to try and mix the two together, guys, so my TradingView people don't get bored. On NinjaTrader, and I can't stress this enough, Renko bars are not minute bars. Minute bars are not Renko bars. NinjaTrader cannot be TradingView, and TradingView cannot be NinjaTrader. So you've got to get your brain on which platform you're using. But a strong trigger look is always a strong trigger look, and it means that when the background is green, the trend is up. Your small triggers, Jerry, are you asking for, hold on. All right, guys, tongue in cheek, no one get wound. So Jerry, these are called instructions. So there's a video, 100% on the indicators, and there's a great example of the trading plan. There you go. John Novak is on it. Have you watched these? And then believe it or not, I've got probably 100 pictures of the trades. Is there something that we're leaving out that you need? Because I don't mind building something for you. But I feel like we've been pretty thorough. But I'm glad to. Let me know. If you're like, Mark, show me this. I'll find a way to get it done, Jerry. I will. Guys, momentum. In an uptrend, smalls must be above the large or wide space between. It's that space that lets me know that the odds are favorable for the market to continue up. Smalls below the large in a downtrend when the background is red, space between. It's that space that lets me know that the odds are favorable for the market to continue down. So guys, when we look at a large chart, and this is the NASDAQ, separation between the small and large, does everybody see it? That's momentum. And it's no surprise with more examples of the trades. Like live examples, moving examples, Jerry. All right. I thought I did some of those. Let's see if these load. That's a momentum long. That's how to avoid a loser in a trend trade. There is an HVA trade. I knew I'd done some of these. And then there's a video where I just didn't get a fill, but it's all moving. Let me know if those help. And I'll make more. I'll make more. Guys, you make some videos for me. That'll be awesome. So check it out, guys. Strong triggers, big push. This was that giant move down in the NASDAQ. And the momentum led the way. And then, hey, Cav, and then when those small triggers return inside of the large triggers. Whoops, wrong picture. When the small triggers return inside of the triggers, that's weakness. This is where big retracements from the middle of nowhere happen. This is where key Fibonacci areas are more likely to stop the market. And if we just go back and look at that big NASDAQ chart one more time, check this out. Weakness right at Fibonacci, that's where the reversal started. Momentum pushes and breaks areas, becomes weakness, right at a key Fibonacci area, and sure enough, there's your big retracement. Weakness is where the reversal came from. Momentum breaks areas, weakness at a fib, and there's your big retracement. Do you guys see it? So it takes one bar on the large chart to determine whether or not you have momentum. Smalls below the large, space between. Ladies and gentlemen, the NASDAQ is telling you this market would prefer to go down rather than up. And that's just your instant read on the chart. This is crude oil. And crude oil is not giving that advantage. The smalls have worked their way back inside. The large are flat, guys. Now the smalls are even pointing up. Your advantage of momentum defined right on that first bar. Oh, and now we're watching momentum grow. This is kind of cool. See those small triggers? Cap. See those small triggers? They're starting to point up. See those large triggers? They're starting to open up. I can see that they are trying to create a little momentum, but they're not there yet. And then finally, one more, guys. This is the S&P. Smalls below the large, larger down. Could you give me a Y? That's momentum. First bar, all it takes. And we're going to find that on the large chart, guys. The large chart will define the momentum in the market. The large chart will define the direction of the market. And the large chart is going to define trouble. And man, oh man, does the large chart do its job? It's no coincidence that the market bounced right off of that blue Fibonacci support. It's no coincidence that the down came from resistance, that this support held the market and pushed it back up, or that this giant move started right from a fib, guys. These areas on the large chart, these are where decisions are made. These areas on the large chart, fibs, mid bands, or fibs, divergence highs, one-to-ones, that's where the people that control the market, that's where they're making decisions. And the cool thing is, and someone said this yesterday, the market respects these areas. And I want you to see this. The market respects these areas because, guys, it was market movement that created these areas. This is a reflection of fear and greed. This is where the people who create trends, where the people who establish momentum, where the men and women who make decisions are making decisions. And you know about them long before the market ever gets to them. So let's learn how to identify a termination condition. Rule number 2 says I need to have room to my targets. Guys, if decisions are made at these areas, the first step is let the people in control get to the area. Let your price reach the area. For you dynamic Renko bar users, that means that these price bars reach resistance or that these price bars reach support. Once you reach the area, we're done with price. Price is irrelevant. And guys, this is a Ninja Trader lesson. Count your trigger lines. Both small, both large. 4 lines remain below resistance. Resistance is a termination condition. It could stop the market. I want you to believe that it's going to stop the market. It could create a giant, ugly, untradeable bounce. That area could break. And here's the reality. You'll never know. You'll never know what they're thinking. But if you use that simple recipe, they got there, my triggers couldn't break, absolutely no trades. It's going to keep you out of a lot of heartache. Sellers in control, push down, reach Fibonacci support. When they get there, 4 trigger lines above. There's no reason to be sad today, guys. We know that area could stop the market. But areas break. So let's count trigger lines and know the most likely outcome of the area. So 0 trigger lines, there's my big 0. Just assume that the area is going to hold. Assume that there's going to be a bounce. Assume that there can be a reversal. If it's really going to break, guys, your triggers will tell you it's going to break. If 2 of your trigger lines, the small trigger lines, get above that area, and we're talking one-to-ones, the same ones that stop the market here, When two lines get above, this area does have the potential to break. It's not a clear path, but there is potential. And I'm going to let you in on a secret. It's kind of sketchy potential, guys. I don't get real excited about two trigger lines. Three trigger lines through, two smalls and one large. Aha! Now we're talking. Here comes the breakout potential. It's a much better look, and you can find ways to capitalize. It's in that KISS plan. But when four trigger lines get through an area, that area is broken. And that area of resistance behaves as support. And guys, that's true on either platform. If you break an area, what was behaving as resistance will now behave as support. And what is behaving as support will now behave as resistance. But the cool thing is that you don't have to guess. When price reaches Fibonacci support, and guys, look at the move. Where it started, price reached Fibonacci resistance, none of the triggers broke, and it pushes all the way down. They know where these areas are. Price reaches Fibonacci support, no triggers through, there's a bounce. Sellers weren't done, they tested again. Buyers tell them to get bent. Another bounce. They tested again. And the triggers are even higher away from that area. And look what the market's doing, guys. There's your reversal. Now there's odds favorable momentum. And I'm about to have four triggers above resistance, which means that bad boy is about to act like support. Do you guys see it? Boom. Now I have momentum. Well, there it goes. NASDAQ is fast. But guys, there's all the lessons that we just talked about in one frame. Pretty cool, right? So, I have momentum. That's the first thing, guys. Momentum is the breadwinner of the family. Momentum pushes a market. Momentum's what it takes to break areas. Momentum's going to cover some of the mistakes that I tend to make as a brand new user. That clear path is going to be imperative to my trading health to make sure that I'm not trading into something that could stop the market cold. And guys, once I have it, I'm going to define an entry. And the exactness and precision of the entries are what still astound me to this day. And I know you're like, oh, he's just saying that because he works for Nexgen. Guys, I'm telling you, we're talking precision. We're talking damn near to the tick sometimes. So it is so precise that you'll use a limit order to buy or sell a pullback. So when the large crowd says up, up fast, nothing in the way, your small crowd is going to show a little fight, a little push, a little retracement, a tiny move counter to the underlying trend. We're going to take advantage of that because rule number 3 says that we can buy or sell that pullback at areas. Now, when we talk about areas, we're talking about fibs, we're talking about a mid-band, or we're talking about yellow 1-to-1s. Because the same way these areas can stop a market on the large chart, they can create a bounce on the small chart to get us in the direction of the trend. That is where the market is most likely to continue. But that area needs to be inside of triggers, guys, because triggers are moving averages. And one of the fundamental laws of math, I don't know, I just made that up because it sounds good, is that price, when it breaks away from large triggers, it typically pulls back to large triggers. And when it breaks away from large triggers, it typically pulls back to large triggers. So what we're going to do is we're going to use a limit order to buy or sell a pullback, that little retracement, and we're going to buy it at an area, at a fib, at a mid-band, at a yellow 1-to-1. And the most important all capital word you could ever put in this rule is that those areas are inside of triggers, inside of the large triggers. So your entry chart has large triggers, they're smooth, and it has synthetic triggers. These are the large triggers from the large chart. When these bad boys overlap, you have the tightest range ever. And well, we don't have any rules met here. And this is NASDAQ. When you have your rules met, price tends to pull back to large triggers. Price tends to pull back to large triggers. When I have areas inside of triggers, I can pinpoint where the market is most likely to bounce. When the rules are met, I can pinpoint where the trend is most likely to continue. I can pinpoint where the small crowd failure is most imminent. So your entry rules are 100% dependent on what the large chart is telling you. So if the large chart has momentum, If the large chart has a clear path, if the large chart says go look for an entry, I'm going to be able to define it on a smaller, faster chart, on a refinement chart. And it's a pullback at an area inside a trigger. So I'm going to give you guys the recipe visually for a long trade and a short trade. And it's just a pattern, guys. This pattern repeats itself all day long. When my large chart rules are met, my small chart's going to look like this, guys. Everything's going to be going up when the large chart's going up. Everything's going to be screaming. The momentum's going to be strong. And you are going to have what we call the fear of missing out. Has anyone ever heard that in relationship to trading? The fear of missing out. Believing in your heart of hearts that if you don't get into this move, you will never make another penny in the market. This move is never going to stop. It's never going to let you in, and you're probably going to end up living under a bridge eating beans with a stick, right? Guys, that's not true. Because the market moves in patterns. The market has a memory. We've identified the pattern. And your entry pattern begins with a reversal bar. This down bar says, hey guys, the fight is on. That's the beginning of the pullback. Here comes your retracement. Let's define where the retracement is most likely to go, guys. From the top of the large triggers to the bottom of the large triggers. Doesn't matter if it's large over synthetic, synthetic over large, guys. These large triggers define where this retracement is most likely to go. And I want you to believe that it could always go to the bottom of those triggers in a winning trade. It's just a range. But the market's most likely to bounce from areas inside of triggers. And when there's multiple areas, I have no idea which area is going to produce that bounce. Do you guys remember that your large chart says up and your large chart is strong and there is nothing in the way to create a bounce? That's rules 1 and 2, which means that your job, and it takes a little courage, is to activate a limit order a tick or two above that highest point of support and say, I hope they push down and I hope they get me, and I'm not going to trip over some pennies trying to save dollars. I don't want an entry order down here because with those large chart advantages, guys, I want to be in. I don't want to miss it. And I realize that it could go lower, but this is my best entry. And the short entry is the same way. God bless futures. We can make it both directions. First, it's a reversal bar. Define where the retracement is most likely to go. Define where the market is most likely to bounce. Get your limit order. Just wait for them to come get you. I see you guys selling the high tick. I see you guys buying the low tick sometimes with this awesome methodology. I was going to say something and I totally lost my train of thought. Nope, I'm back. I'm back. So guys, here's the cool thing. And now dip, this is where I'm going to address you control the risk, and you're absolutely right, guys. You will control how many contracts that you enter. So Ron, a limit order waits. A limit order says, if the market gets to me, then I will enter here. A buy or a sell order. So for example, a buy or a sell order. If I hit buy market, I buy market now, wherever it's at. That's my entry. A limit order that we use for the trend trade means that I right click on my chart, and what I'm saying is if the market pushes to 64.08, then I will be in a position. Does that make sense? So for the high probability trend trade, we're using limit orders. We're waiting for the market to come to us. We're calling our shots. And now let me show you guys the wonderful thing about learning to define your entry on NinjaTrader for the high probability trend trade. And Dip, this goes back to I am in control of the risk, and I agree with your statement 100% regarding the number of contracts. But my stop belongs where the market should not go. And that's defined through my trigger lines in the areas within. So if the market pulls back to resistance inside of triggers for a short trade, Anything above those trigger lines is where the market should not go. Anything above those trigger lines is where my advantage for rule number 3 is no longer in play. So my stop goes 4 to 5 ticks above that trigger line. So the wider the trigger lines are, the more risk that I have. The tighter they are, typically the less risk that I have. The lower the areas are inside of those triggers, the less risk I have, but it's all dictated by where the market should not go. And that's generally 4 to 5 ticks above the trigger lines, beyond the retracement zone. Um, so I think that we agree 100%. So if my risk is $100 per contract, I can say, okay, I'm willing to risk $500. Let's put a 5 lot on, right? And the cool thing is that you guys will know where your risk is before you ever enter the trade. Because on your KISS plan, there's a solid management plan, guys, and it's right up here in the top, and it's written out for you. And it says, keeping things super mechanical, just like the entries. If you take an entry 2 ticks below resistance inside of triggers, well, then your stop belongs 4 to 5 ticks above the triggers. And you know that you have $150 worth of risk per contract going into this trade. And you know it before you ever enter the trade. You have to accept that risk, guys. You have to embrace that risk as a cost of doing business. You don't know if it'll get hit or not. Anything that wins 70 to 80% of the time, guys, it's going to take your lunch money 20 to 30% of the time. That's okay. That's a cost of doing business. But here's the cool thing. If you really have the advantages in place, if you've gotten in at the right spot, your stop is where the market should not go, not here inside of the retracement zone, not here at an area, more often than not, you're going to get a reversal bar in the direction of your trade. And this is your first stop movement, NinjaTrader users. You're going to put a new stop where the market should not go, 2 ticks above the high of that reversal bar, because this reversal bar is confirming that the market is going down from the area it was most likely to go down from. It's confirming that the market is going down with momentum and with a clear path, guys. And then in the KISS plan, and the plan that I've given you guys and dropped in the room, your targets are $100 and $200. And that first target gets hit a lot, even in trades that fail. It's teaching you how to get paid, how to put money in the bank, how to get that. And you're going to go break even, guys, and it's either going to hit your second target or it's not. But if it does, that's a $300 trade. And this is your foundation. For my NinjaTrader users, that is your core. That is your basis for everything good that you're probably going to do with this software in your life. And it's going to revolve around momentum and path and then finding an entry. So NinjaTrader users, how do I study this, Mark? How do I learn this trade? Well, go back. When you have momentum and path, and we don't have it here, when you have momentum and path, let's see if we can find an example. Been a bouncy morning, right? Let's just circle this tail, guys. And let's go back and let's see what that circle looks like. And humor me here. It is directly into a termination condition. I see that. I accept that. But can everybody give me a yes? If you can see that the market produced a reversal bar, pulled back to the area inside of triggers, danced a little bit, and then continued up with momentum. This is your pattern, guys. This is your bread and butter as a brand new user. And what's going to happen is once you start to recognize momentum and path, once you get comfortable with a plan that's been proven to win more than it loses, let's zoom this out a little bit because my eyes are old. You will be empowered to craft a plan, and it'll be based on your personal goals, and it will be a reflection of learning to read your indicators. So NinjaTrader, 2 charts, 3 rules, high probability scenarios. TradingView does not use dynamic Renko. Woo, that was a big move. TradingView uses minute bars. Where did they go? A 15-minute bar on your large chart. Let me open up your TradingView plan, guys. I don't keep any secrets from you. The 15-minute Bar is a slow bar. Guys, 15 minutes is forever. You're going to use this key roadmap for targets, turning points, and terminations. You're going to use this 15-minute chart to recognize trouble. You're going to use this 15-minute chart to say no more trades into that zone. You're going to use this 15-minute chart to say everything says down, I want to go down with it. And guys, it's a big, slow chart. Right now, your trend is down with a red background. Look at this bar. It went from 530 to 614 and a quarter. That is damn near 100 points, all inside of one bar. Your 1 minute bar is going to show you everything that happened inside of that bar. So when we're talking trading view, the 15-minute chart leads the way. It will define direction. It will let you know if you're on the good side of momentum, and it will identify potential problems. Your 1 minute chart defines immediate strength, which means I always want that 1 minute chart in favor. I don't want to fight the 1 minute chart. When we talk about entries, entries come from mid bands for trend trades. Entries come from HVA lines, from terminations and zones, from areas that stop the market and send it the other way. And then momentum trades are going to use HVA lines and zones as well. So there's a checklist: trend trade, HVA trade, momentum trade. All of these trades are outlined here. And what you're going to find, and trading view users, let's talk about momentum first, because it is such a slow chart. We're going to do this. What direction is the market going on my large chart? The trend is down. That's the first step. And my first inclination is I just want to go with the trend. But then I'm going to ask myself, because it's such a slow chart, what direction are my small triggers going? Does everybody see that the small triggers are going down? The large triggers are going down. There's space between. Guys, that's strong triggers. I love this look. It's nothing but shorts for me. You couldn't pay me to try a long trade. There's just no reason to fight strong triggers. But when we look at it and we dissect this big picture just a little bit deeper, you'll see price on 3 different spots versus these small triggers. And one of the things I do, or at least I did in the beginning, I would draw a line, or at least an imaginary line, on the small triggers, and I would say to myself, where is price compared to these triggers? And there's 3 options. There's the first option, which means price is to the left of the triggers, guys, and left of triggers is strong. Left of triggers is your best look. This is your strongest look. This is where life is just good. Inside of the triggers is a transition. There could be some fluctuations. There could be little pushes up, and the weak side is where you see bigger retracements, typically pulling you back to trend trades. So I always ask myself, am I on the strong side? Am I on the transition side? Am I on the weak side? But it all says short. So there's your rule number 1. Does that make sense, TradingView users? I still have to make sure there's nothing in the way, guys. So when I talk about, let's go to TradingView real quick, pop it up here. Look at that run. My trend is up. My triggers are up. I'm on the strong side of triggers. Do you guys see that? That's your initial read. The trend is up because the background is green. The smalls are up, and guys, I am on the good side, the healthy side of small, the strong side of small. And now I ask myself, is there anything in the way that's going to screw up my good time? Well, this was a big move. And I've got a little zone here, and I've got an outer band here. And guys, I want you to learn to respect these outer bands as places that could create a bounce. And look at your 1 minute. You're kind of seeing the reaction right to that outer band. And it's not a big reaction yet, but that's a good spot for a retracement. That's a good spot for a little push down. And that's your read. And if you go to crude oil, here we go. The trend is down, but the small triggers are up, and I'm on the strong side of the small triggers. And guys, there is nothing in my way should I choose to trade with a small trigger direction. Does that make sense? That's my initial read. You guys with me? Cool. So when my smalls are up, when I have room, there's two types of trades, guys. The biggest trades. The first one is what we call a momentum trade, and that means that you broke through resistance and it became support. And with strong triggers, ladies and gentlemen, with that breakthrough and pullback, and there's an example right here. Whoops. You have what we call a momentum trade. And one of the checklists says, hey, buy that pullback to the zone. This is your momentum trade. And that one was good for 14, only about 7 ticks before your momentum died, before it closes on the wrong side of the triggers. Once price gets back below, and once these triggers roll, so let's talk more about the roll. Once these small triggers turn against you, right there, does everybody see it? My momentum trade is off the table. My momentum trade no longer exists. What I have to do is I have to patiently wait for the market to pull back to a zone, to an area, to a mid-band, and get a close on the correct side. And here, it doesn't happen. And at this zone, it doesn't happen. And once I get down to that mid-band, there's where the market finally closes on the correct side of the triggers for the trend trade. And it dances a little bit, and then off it goes. And it gave you your first opportunity, stop behind the pivot, and then it tried to go and came back, and then it gives you your second opportunity, and then a third opportunity. And if you caught any of those 3 opportunities, your day is done and you're going to the beach. So TradingView users, does that make sense? Because I have small triggers up and nothing in the way, I'm going to look to go. And this was a great example. So in the journal, when I make pictures, sometimes I pick favorites. So this is your trend trade look. This is your pullback look. Once the small triggers roll, and guys, I want you to believe this, once those small triggers roll against the trade, get back inside, there are no more momentum trades. I'm not just arbitrarily buying areas. I need that close on the correct side of the triggers. The other look is when everything is strong. That's when we'll use that limit order, and we'll just have it waiting right there at the area. And because the smalls are below the large, because the momentum is strong, that's your momentum trade look, guys. So there's 2 entries, 2 styles of entries. There's the everything is strong and nothing's in the way. Let me take the momentum trade. There's the egads, this stinks. The momentum turned against me on my smaller, faster chart. Let me patiently wait. Let me patiently wait for the close on the correct side of the triggers. Does that make sense? I hope so. And guys, it's all dictated by what your large chart is telling you. It's all dictated by, and guys, it did it in a downtrend. Do you see that? Because the smalls are still below the large, my background is down, which is why you have to go through, where are my smalls? Where am I in relation to the smalls? Good stuff. Great stuff, guys. And look how that outer band stopped forward progress. Do you see it? This is why we respect the outer band. Small triggers are down, right? Small triggers are down. I can't even entertain the thought of a long trade without a close on the correct side of the triggers. If I got a close on the correct side of the triggers right here, do I have room back to trouble? That's where that, is there anything in the way to kill my good time? So let's just watch it. 30 seconds. Guys, if you don't have the timer on your minute bar, let me know. I'll show you how to do it. That 30 seconds is amazing because that bar probably threatened to close above, and that bar probably threatened to close above, and this bar, well, it may close above before we ever get to trouble. Awesome, Mike M. I got you. So down here at this little wagon wheel, click on it and go to More Settings. And then right here under scales and lines, there's the countdown to bar close. Here, let me take a picture of it for you. So it's settings, scales and lines, countdown to bar close. And Mike M, I'm gonna tell you right now, that countdown has kept me out of about 1,000 losers already in the last month or two. Thunderstorm coming, go shut it down, Ron. Have a great weekend, man. I appreciate the time you spend in this room. I really do. Now here, and guys, I want you to see this. This is going to be the biggest pain in the ass you ever go through with minute bars. And this is going to happen every now and then. I just want you to accept it. Look where the market, look where this bar closed above the triggers. Look at where the thing that could ruin your good time was. Guys, there's no room. There's just no room. It's okay to not take that trade. And I was talking to someone once, like, well, Mark, it always does that. No, it doesn't always do that. It just always does it when you're excited about a trade. So, well, not really, but sometimes it does, right? It came back and said, hey, trade that zone, right? We're going to go test it again, get a running start. And now you're just ping-ponging between two areas. You're not seeing the mouse move, Todd? Guys, can you see my mouse moving? You guys can? Todd, let me see. Let me do this, Todd. Hold on. I'm going to kill the visual real quick and bring it back up. I don't know if this is going to fix it, but it's worth a try. Did that help? Sometimes it does. Sometimes just a little reboot of the camera gives guys what they need. And gals, no offense, ladies, that did work. Heck yeah, I can fix anything. So check it out. It did close above, and it smacked into trouble. And it pulled all the way back, but it's still going with strength and momentum. And guys, this is one of those times where you just have to accept that some days you're the boot and some days you're the butt. Strong triggers, breaks through, pulls back. There was a great momentum trade, right? Let's see if there were any other opportunities. Strong triggers, back to the HVA. That's a tough one to catch. So how do you get to where you want to be? Let's recap. Learn some rules. Guys, I don't care if it's TradingView rules. I don't care if it's NinjaTrader rules. Learn the rules for the platform you're on. Keep it simple. Keep it focused. And ask questions. Is there anyone in the room unable to post pictures? Is there anyone in the room that doesn't have some way to snap a picture, to copy it, and to paste it in the room? Because that picture, ladies and gentlemen, is your private session. That picture that you drop in the room is how we're going to know where you need help. That picture is how we're going to know what you do well. And that picture is going to get you where you want to be faster. So don't be afraid to post in my room. When you post in my room, please annotate. Don't assume. Guys, I love your money. Let me do this. I love it when you win. I love it when you win, but your win doesn't pay my mortgage, right? Your win doesn't buy me nice things. Your win doesn't get me on the golf course. So don't let it be about the money. Let it be about the process. Let it be about the pattern. Let it be about having an edge and an advantage. Hey, Crowbar, good to see you. And what you'll find is that when you stop focusing on the money, you start focusing on the process, and it's the process that yields results. So post in the room, guys. Take a lot of pictures. Where do you stash those 4 videos? They are in my personal computer, Paul. So I'm going to need you to come to West 28th Avenue, Spokane, Washington. I'll pop some popcorn. They're in the chat box. I mean, that's kind of where they are. So if you want to go through and look at them, and guys, I'll make some more. We have been so focused on getting all the core basics, all the core, always real butter in this house, Paul. I married a good Southern woman. We were so focused on giving you guys a plan that you can be consistent with, whether it's TradingView or NinjaTrader. We're so focused on providing you a funding company with amazing drawdowns and easy rules, guys. That we haven't built a ton of videos for TradingView yet, but they're coming. Don't you fear, they're coming. So that's my first hour, guys. When we get into the second hour, it is going to be 100% chart reads. Momentum, 3 triggers through, pull back to the area inside of triggers, but divergence. Divergence. Looks good, the funding company. Have you looked at it, Pibby? I love the rules in the funding company, guys. I'm going to tell you right now. I have been with quite a few, and John does post in TradingView a lot. Crowbar, I don't know how experienced you are. I encourage you guys to remember that John Novak is 27, 28 years ahead of you, and he sees things and takes things and has a different plan than you sometimes. Don't try to be John Novak. I've watched people blow out accounts trying to be John Novak. The prices are amazing, guys. The prices are amazing. The drawdowns are generous. Generous. And the language is plain, right, Gary? Whether you are going to trade the evaluation, whether you're on semi-live, whether you're live pro trader, guys, the rules don't change. And a lot of prop firms, they do. A lot of prop firms will get you on that eval and say, yeah, you've got a $78 million drawdown. Don't worry about it. Give us your fees. And then they put you in. Okay, now you have a 38th of a 1,000% trailing drawdown. Watch out. So, man, I'm biased, guys. I really am. I'm biased. But if you've spent any time with prop firms, and you look at the rules, it's pretty cool. I don't have any problems with Apex, right? Only trade Apex after your bar exam. But guys, you have to have a completely different mentality with Apex, because if you're up $500 and it comes back $500, that $500 is still off of your trailing drawdown, even though it was a break-even trade. So I don't hate anything. I hate Nazis and people that hurt animals. That's about it. Everything else I just dislike. But you've got to change your plan if you're going to trade Apex. You've got to get paid. You've got to get paid. So guys, quick lesson. And if you're in the KISS plan, that divergence right there told me that this area was less likely to break. That divergence right there said don't do it. It's less likely to break. That's in the KISS plan. We're trying, Pibbies. We are so new. And I think that we're not used to being new because we've been in the software business for 28 years. I need you guys following us on Instagram. I need you guys telling your friends, posting pictures, right? Are you all in the affiliate program? Does anybody have friends that don't trade? Did you guys know that you can make like 20% off of everybody? So if you're in a group, post a link. If you're there, post a link. All right, I'm not going to go into the sales thing. I'm going to go take 2 minutes. Dip, I'm talking about Nexgen Pro Trader Funding. We released about a month ago. It is put together by John Novak and his beautiful wife, Melinda. And I am one of the employees, guys. And this is your arena. Trade other people's money. Trade other people's money. The days, no, it's available to everybody. It's available to everybody. And Dip, it's actually what got us over to, it's what got us over to TradingView, to be honest with you, the stability. How do you convince your friends to trade? Win, Todd. Win. Learn the basic rules. Absolutely not, Pibbies. Absolutely not. You cannot pass in one day. That's gambling. Pibbies, if you're trying to beat the system in a day, that's gambling. One of the things that I love about what we've done, guys, we want a relationship. We want a relationship. Yeah, that's true, Dip. There's a lot of people that think it's super risky, right? No, is a great question, Pibbies. That's one of the things that we're proud of, guys. There are no one-day passes. There are no, hey, don't prove yourself, right? We've been building consistent, profitable traders for 30 years. That's who we want to do business with. And the great thing is that if you're not there yet, we'll work with you every step of the way until you get there. That's the cool thing, guys. It's the prop firm is where you practice what you learned with the software. The prop firm is where you test that plan, where you test your ability to follow rules under pressure, right? And you do it for pennies on the dollar. That's what prop firms do for you. This software is good for the NASDAQ. That's all I trade, Pibbies. That's me right there. That is all I trade is the NASDAQ. Everything. Patience is the key. So I suck at taking breaks. And now you can look more exactly. Oh, absolutely. People always ask, what's the advice you would give people? What's the advice you would give people? Guys, I don't give trading advice. I refuse to. But I'm going to tell you right now, if I were inclined to say, what do I think creates the most successful traders? It's this right here. It's having a set of rules that you believe in. It's proving that those rules win more than they lose. And it is your reluctance to deviate from the rules that are bringing you success. That's what creates successful day traders. The successful day traders that I work with do the same thing every day. And they sit on their hands until their checklist is met, whether it's NinjaTrader, whether it's TradingView. So that's what this room is for, guys. This room isn't designed to show you everything you can do with the software. This room is designed to show you the best things you can do with this software. When you have momentum, when 3 triggers are through, right? When the potential is there to break. Being able to, before the market ever even gives a reversal bar, knowing exactly where it's most likely to bounce in the event of a pullback. Does that make sense, everybody? So once you learn this, you have to practice it. Once you practice it, you go to the prop firm and you say, all right, let's give it a go. And if it turns out you panic under pressure, go back to simulator and build a little more trust. That's okay. It's all right to do that. So momentum, only 2 triggers through, ladies and gentlemen, not your best. Look. Look at all that movement in the NASDAQ. And oh, that's the S&P. And look where that big push-up started, guys. Right from support with every trigger above it. Right from support with every trigger above it. Pretty cool, right? Is on the back up chart. Do me a favor, Pibbies. Give me, oh, there it is. There's your link. I was like, I need bigger pictures. When you say is on the backup chart, let me see if I can figure this out. Here at this area, we're still looking for sell, even though when the small triggers are green, but it isn't a Fibonacci line. So watch this, Pibbies. No, you're going to dig it. Check it out. First, I'm going to get rid of the word we, because there is no we. But let's go through it exactly like we teach it. So what direction is the trend on this chart, guys? Everybody play along. This is how we get better. Is the market going up or down? Background color, it's down. All right. Do I have strong triggers, Pibby? Smalls below the large, larger wide, space between. All right, so I have momentum. Do I have a clear path? Are 4 triggers, are 4 triggers below those yellow 1-to-1s? Let's ask it again. There's 2 trigger lines, but 2 trigger lines are still above. Do you guys see it? Counting triggers. Didn't see the 1-to-1? That's okay. Now you see it. So guys, what we have, because it's down, because there's momentum, there is potential but it's not clear. Does that make sense? 2 triggers through, says it's potential, but it's not clear. Sounds like a B setup. Let me see if I understand what you're saying there, Todd. You're saying because one of the advantages is gone, it's a medium probability setup, manage assertively. Todd, you are brand new, my friend, and you are already catching on. So let's do this. That's the NASDAQ, right, Bibby? Let's go see what happened. When was that? Was that this morning? Was that... I'm looking for that low. Oh, that was last night? We'll get to last night. That was it right there, wasn't it? All right. Let's see if the small chart gave us any indication that that was going to push up and take you out of your trade. So I'm going to put that box on there. And I'm going to open up my small chart, and we are going to rewind that NASDAQ until we see the yellow box. And I have a hunch, I have those sometimes. Did I miss it? Hold on, I might have missed it. Let me get a timestamp real quick. Timestamp was middle of the night. Okay. So we were right about Man, there's so much movement in the NASDAQ. There it is. All right, ladies and gentlemen, what do you see on that trade that was only the potential to break? I want you guys to believe this. Do you see divergence? Do you see divergence? Do you see divergence? Everything on your small chart said that is likely to push up higher. That's exactly what it did. It pushed up beyond the triggers. It pushed up, but what couldn't it do? When it hit Fibonacci resistance with every trigger below, it couldn't break it. When it hit it again with every trigger below, it couldn't break it. And ultimately, it did continue down. But that divergence, it told you they've got some dancing to do before they resume. Good stuff. So when it's only the potential to break, 2 through, 3 through, there's your divergence live in front of you guys. Zing, bang, boom, right? Those are avoidable losses. And the cool thing is, and gosh, it used to piss me off. Pardon my French. Sorry about that. I would go long right here. Right here, I would go long with all the confidence in the world while I was listening to John Novak's class. And John would say, well, all right, with this look, they're probably going to go test that midband first. And as I'm getting run over losing money, the market already made it and started bouncing off that midband. And guys, that's a pattern. That's a weak top straight back to the midband. That's your first bounce point from a weak top. The same way it did it right here. The same way it did it right here. Pretty cool, right? So patterns. It's all patterns. 100%. Not much of a fluctuation there. Do you guys see how fast the NASDAQ moves? This is why crude oil and S&P tend to be easier. Awesome. So Pibby, you needed to know if it was a good choice. It can only be a good choice for you, right? Odds favorable momentum. Midband's not a termination condition. Areas right at the bottom of the triggers. Guys, if you get into this trade, there's a lot of risk. There's a lot of risk. No divergence. Clearly defined areas right at the base of the triggers. Do you guys see how quickly I was able to activate that limit order? Oil's down 50, but that's your pattern. That's what it looks like. That's what it looks like. But I refuse to trade the NASDAQ live in the room because the NASDAQ is temperamental, guys. No triggers through. All right. Let's look at some charts. I don't feel like taking a break today. Not yet. Let's look at some of the charts that were posted. See if we can get some good lessons. Let me see where we're at here. Bum, 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 bum. I like sound effects. Does anyone else talk in sound effects? My poor kid talks in sound effects too now. All right. So Paul, 1, 2, 3, 4, 5, 6. I love it. 6 posts from Paul. So we're going to get a lot of good lessons, guys, and we're going to go back to the basics. We're going to go back to the basics. All right, so Paul, one of the things that I do too, guys, is I'm going to start to recognize in you the things that you don't. And this is one of the things that annoys the hell out of my wife, is I don't forget things. So Paul, we're going to do the large chart read. The large chart says coming from an area. The large chart says that the small triggers are up and that price is on the strong side of small triggers. Does everybody see it? The challenge is that zone. And while price tried to get above the zone, it actually pulled back into it, 38. And you just haven't cleared it yet, Paul. And you don't have the momentum that you need for an HVA trade, really. And so if you were going to try it, your entry is perfect. But you just didn't have anywhere to go, and that's the challenge that you ran into. So great management. Great management. Good-looking entry. Strong side of the triggers, and it looks like you may have gotten it just at the top of the zone. You had room to trouble, and you didn't give anything away when trouble held. I'm going to say great effort, just didn't pan out. Nicely done. And then this one, see how you're inside the zone? It's coming off of that VWAP. And you did take a close on the correct side of the triggers, but your small chart was trading directly into something that could stop the market. So that, is there anything in my way to kill my good time clause, got you on this one. And sure enough, it got you. That's okay. Guys, you have to take these trades. You have to learn these before you ever start to break out. So termination, everything rolls. There's your HVA with a pullback to the HVA. That would have been a beautiful trade. And then now my favorite. Trend trade possible. I love it. Below the triggers, with the trend, nothing in the way, pull back to the mid-band, close below, everything you could hope for a trend trade. Guys, that is a checklist trend trade. And it goes down. And if you missed it, it pulls back to the mid-band again, and it goes down. And then Paul says, look at this short entry. Fear of being wrong in front of this crowd will destroy your learning. It destroyed mine, Paul. It cost me $5,000 as a brand new user over the course of 2 hours. Now, Paul, I'm going to get you on this one. And guys, I want you to see something. When you look at what has happened in the market, there was my short trade. I could have made $100, right? When you go back and you look at it historically, I want you to really latch on to, did it fit my rules? Was there really an opportunity? Or were you just jumping in hoping for the best? And I don't care what your answer is, but if it doesn't fit your checklist, if you're just jumping in, hoping that all that momentum carries it back down, that's cool. There's no problem. But the easier trades have rules attached to them, guys. The easier trades, the repeatable trades, the trades that win more than they lose, have rules attached to them. So, Paul, everything says up, and you went short, and it didn't work, right? Strong triggers up, directly into a zone, and you went short. And Paul, you took the wrong momentum trade. You took the fight everything down trade, instead of the buy the pull back to the zone with strong triggers and go with the large sharp trade. Do you see it? You just got your signals crossed. Just, you fought. And guys, I love to fight. We rarely win our fights. Good stuff, Paul. And then once again, straight into a termination zone, right? So the HVA lines, rules have to be met. And you can see here that there's just nowhere to go. There's just nowhere to go. Make sure you have room, guys. Room to targets. Room to targets is going to make life a lot easier on you. And the challenge is that it means you're going to have to sit still every now and then. It means that you're going to have to do nothing. It means that you're going to think that this is going to happen. You're going to wish that this is going to happen. You're going to hope that this is going to happen. But it doesn't mean that it's going to happen. So get that goodness. Strong triggers. Pull back to a mid-band, and it goes with momentum. Awesome, Pibbies. Can't see if you're trading directly into the termination. I don't see the bar. It's a good, fast snapback. Great trade. Momentum, I'm going to assume path. Nicely done. Nicely done. Question, you lost your internet for a minute. Is there a way to close positions without internet connection? What if the outage lasted longer? So Brian, everything is electronic. Each and every one of your orders is sent to your broker electronically. They're on the broker system side electronically. That's one of the reasons trading with stops and targets is so important. I've had NinjaTrader freeze. I've had electrical downs. And as long as my stops and targets are in place, I personally haven't had a challenge. It'll pull me out of my position. And I've come back and had winners, and I've come back and had losers. Victor is out, no internet. Uh-oh. And that's why you always use stops and targets, guys. Protect yourself. I was wondering where Victor was today. Let's see where we're at. Are we learning anything today? I hope so. Momentum and path, guys. What a recipe. Momentum and path. You guys want to see something funny? You'll love this, especially if you saw Gary's trade in the other room. Guys, I made a mistake, and I share my mistakes with you guys because everybody's going to make mistakes. I woke up and saw this and went long, and I was like, crap, that's not right. It's into a termination. Has anyone done that? Sit down real quick, go, dang it, that's not my right trade. Well, then I recovered, and I took my short. And guys, my short was great, whatever. It has nothing to do with the short, but I want you to see something. And I think this is one of the things that sets traders apart. Not that it sets me apart, but guys, this was my rules-based entry, 100%. This was my first target per the plan. This was my second target per my plan, outer band. And everything about this trade was perfect 100% for me. And I had to sit through watching the market go down, and it went down to about right here before that bar ever stopped printing. It's okay. Guys, the next trade is coming. The next trade is always coming. And that's why I shared this picture. Not because, oh, look at Mark, he's a badass, he caught the short. Because, guys, I exited at my rules, and all of this that happened afterwards, that's not my money. And I have to wait for the next trade. And that's going to happen now and then, guys. Don't adjust your plan based on one move. Don't adjust your plan based on one result. Your plan has to be the accumulation of a pattern that has been proven to win more than it loses. It has to be testable. It has to be repeatable. All right. Next picture. Brian, number 17. You say you repeat this error too often. So you're only giving me half the picture, Brian, right? Brian, are you feeling tough today? You got your I'm cool with a little criticism, a little critique. because I want you to see something. You didn't talk about momentum, right? You didn't talk about clear path. And I can't even see your entry, right? So you said you shorted the pullback. You only had 2 triggers through. What happened on the small chart? Was there an indication that that wasn't going to work? Was there an indication that it was likely to push higher? Where you're talking about 5 ticks away. Well, I'm talking about 5 ticks beyond where the market shouldn't go. Oh, Claire, that's awesome. So, Brian, what happened on the small chart at that entry? Was that this morning at 8 a.m. crude oil? Let's go look at it. Let's go look at that at 8 a.m. at crude oil. So here it is. Telling you guys, the whole picture produces results. And there it is. So, Brian, here's your trade. And tell me what you think. So, only 2 triggers through. And we had 1 divergence. We had 2 divergences. We had 3 divergences against your trade, right? Over here, that was your trade? I can't tell, Brian, because you only gave me 1 chart. Okay. So you had momentum. You traded into 2 areas that could stop the market. Perfect pullback. Where did you enter? Because it never made it to the area. Where did you enter? Yellow box. Did you enter here and try to take it as a momentum trade? Did you enter at the fibs and try and take it as a trend trade before the retracement? Did you take it at the top of these triggers here? Hold on, you gave me a price. As one of the things I love for you to do for me, give me 2 charts. Show me your entries. Otherwise, I have to scroll back to a live market and say, okay, shorted the pullback 64.19. So you jumped in. All right, so we're going to go through it. I believe the yellow box puts us at your entry. So strong top. I like it. Momentum. I like it. No resemblance of a clear path. Does that make sense? All 4 triggers are above those areas of support. Are you with me, Brian? This is fun. This is cool for me. So there you are. We've got 1 area. Whoops, wrong one. And I just want you to see this, because when you know what you're up against, it helps. It pays dividends. So there's 1 area that's not broken, 2 areas that's not broken, 3 areas that haven't broken yet. Do you see it? And you jumped in below the fib. So if this is a momentum trade, that close on the wrong side was your loss of momentum. It can't be a high probability trend trade because there is no clear path. So the stop rules for a trend trade don't apply to a trade that is not a trend trade. Does that make sense, Brian? So if I enter a trend trade, and this is a great reason to name your trades, guys. If I enter a trend trade, I have a set of rules for the trend trade. If I enter a 50-50 trade, I have a set of rules to exit the 50-50. If I'm in a momentum trade, I have a set of rules to manage the momentum trade. If I'm in an HVA trade, I have a set of rules to exit the HVA trade. So if you go back and you're saying, I just jumped in because of the strong top and momentum. And Brian, I'm not knocking you at all. You waited to get to the other side of everything. Life is good. But how do you manage it? With three termination conditions, how much are you willing to give back if you're just jumping in hoping it goes down? Doesn't work, right? And those are the questions that you have to answer. Strong top is outstanding. Momentum is insane. You had all the trouble in the world here, and your small chart showed you a pretty solid reaction from 19 all the way up to 32, which means that you had $130 against a trade into a termination condition. And this is the management part of trading, guys, and this is such a great lesson, Brian, and I'm very thankful that you posted this in the room. How much is enough? How much are you willing to lose trading into termination conditions? For me personally, with this look, that fib becomes my entry and my line in the sand. And if I get 2 or 3 bars against it, it's no longer giving me an indication that that area wants to just break effortlessly and give me all the winners that I want. Another way to think about it, Brian, is because you're in determination conditions, wait for the reaction. And then maybe a second chance after the reaction. Does that make sense? It's an interesting trade because I don't have rules for it, but I see the reasoning. But it becomes a little more difficult to manage. So one more thing I'm going to throw in, Brian. Everything, you love the down trade, right? You love the look of momentum. You love that it comes from a strong top. Have you heard the idea of using a reversal bar for entry? Instead of just jumping in, what you can do is you can say, okay, if it pulls back and I get a reversal bar, I can put my stop behind that reversal bar. If it never gives one, you don't enter the trade. But the other side of that, Brian, is if it just runs without you, sometimes you got to be cool with that. Sometimes you just got to let it go. Does all that make sense? I like the reasoning. I really do. I think management's the next step in that trade. Management is your next opportunity in that trade. Has anyone noticed just how often these stupid lines stop the market? I love it. And you know about them, and you know where they are. Uh-oh. Uh-oh. Was that momentum and path? And pull back to an area inside of triggers? Did anybody catch that one? Oh, momentum, clear path, pull back to an area inside of triggers, and I'll be darned. That thing rocketed all the way up to Fibonacci resistance. Post them if you got them, guys. Let's see them. I'm wound up today. I'm having fun. Trading doesn't have to be stressful. It just doesn't. I think when you realize you're not in control, when you realize that no matter how much you wish in one hand and poop in the other, the poop hand always fills up first. So you might as well stop wishing, right? Follow a plan. Gary. Coming from terminations, small triggers are up. Gary didn't buy the pullback to the HVA, gets in on the way up, makes all the money. Nice job, Gary. A lot of dots on that chart. A lot of dots on that chart. Great job, though. Triggers up, triggers strong. Strong triggers, buy the HVA, make money. Guys, there's your momentum trade. Small triggers up. Gary, I'm going to assume that most of these dots don't fit in with any next-gen plans or something that you've added. I'm going to say above the 1-to-1s, strong triggers, room to the target, strong triggers. Guys, when everything is strong, buy a pullback to the HVA. That's on your checklist. That is on your checklist. Nice trade, Gary. Your charts have the measles. I love that it looks different. It's Gary's chart. It's Gary's chart. And now this one looks even different. My gosh, Gary. Pull back to zone. Okay. Close above, maybe, maybe not. Not sure. Catch it on the way up. Following stops, got you. All right. That's a smart stop placement, though. Do you guys see it? Let's go through Gary's stop logic here. Gary says, I'm already in. I'm already at money. The market is above trouble. I'll put my stop below that trouble, and if they come back below it, I don't want to be in the trade anymore. Where the market shouldn't go. Nicely done, Gary. I don't know if Gary's even listening, but where the market shouldn't go. Great stop placement. Can you guys hear my mouse spinning as I scroll? All right, Brian. From now on, because I've been all lectury, Brian, will you give me two? Will you give me two charts? Because what this is mine may be bigger than yours, right? And I say that respectfully. Should have set my limit at 64.07-ish. Why? Why should you have set it at 64.07? I see momentum, right, at 18. I see nothing in the way. I love it, right? You have momentum. You've got, it looks like 3 triggers. No, maybe no triggers through. You jump in with room to the fib, and you must be magic. 2100. I love it. Momentum, dude. Momentum. But I can't really give you any feedback. It's greening up. You went up with it. Awesome. How do you make it repeatable? How do you make it repeatable? And let me show you what I mean. And this is for everybody, not just Brian. Choose to get paid isn't an exit strategy, right? Why did you choose to get paid? 6 contracts buy. That's not a strategy. Why did you choose to buy, right? Because what your plan says here is every time the market gets to 64.18, I'm going to buy. What if the market's going down? Now, every time I'm up $2,100, I choose to get out. That's a great plan. But what if that fib stops the market the way it did here, right? What if you get 3 divergences printing on a small chart somewhere over here that could reverse the market? So guys, annotations make it repeatable. Annotations write the recipe. Annotations tell you when you had momentum and the potential to break and no divergence and a pullback to the mid-band, life was kick-ass. And I made a shit ton of money. Pardon my French. It's Friday. I'm not going to swear anymore. I'm writing a note on a piece of paper. But I'm wound up. Make it repeatable, right? It's for you, Brian, not me. It's for you, not me. I'm not trying to give you guys more work. I'm not trying to make it difficult on you to have $1 million job, right? I'm telling you, you can make everything repeatable and testable. All right. Mike M, entry. Okay. Profits at outer band. Kick ass. Oh, here's why. All triggers up. Took trade on white bar up. 15-minute hit support zone. So here we go. Hold on. I don't see a support zone, but I do see you in on the weak side of triggers that were probably down. It looks like you had momentum over here, and you didn't trust it. And you got in, you got out. That's cool. All right. But I see this one. I got to talk about it, right? And then when everything starts going your direction, you're on the strong side of the small triggers. You're above trouble. You have strong triggers. You are in at 6,000. So you took this big white bar up right here and said, here we go with the breakout, right? And you got out at the outer band. I like it. It makes sense, right? First trade, no rules. Mike, can I put you in the spotlight real quick? And please don't take this as me busting chops. This trade right here has every advantage, and that's going to be pretty easy, right? You know exactly what you were looking for and why you did it. How do you avoid this trade? What can you say about that trade that'll keep you from giving that money back? That's why I like annotating all the trades. And maybe you did it and just didn't present it. But guys, losers are where we get better. When you follow the rules, winners are easy. They really are. When you follow the rules, winners are easy. They're effortless. Small below large looks like consolidation. I don't know. I see strong smalls up. I can't tell where your price is trading with all of these. And I can't tell if it's above the outer band. 37, 37. You're above the zones, but the small trigger's turned. Can't take a momentum trade. I don't know. I think that you call consolidation really fast. Consolidation, guys, takes a while to consolidate. Consolidation isn't a reflection of 2 to 3 minutes in the market. This is consolidation from 6:30 a.m. until 10 a.m. Caught in between fibs. Guys, that's consolidation. That's consolidation over the course of 30 minutes, right? Consolidation isn't a small chart endeavor. On your small chart, sometimes it'll go a little sideways. But if you look at where it went a little sideways, it was just working through. There's no consolidation. The market just has to dance a little bit before it continues up with momentum. So consolidation is a bad word in trading for a lot of people. It takes more. It takes more than 6 bars on a 1 minute chart. Now, it may not be rules not met, and that's okay. That's a good reason to sit on your hands. But consolidation means the market can't break out of a range. And I'm a language guy. I'm a language guy. Pibbies, we saw that one. We talked about that one. Even went back and studied it. I love it. 10 km. Let's see what you're doing. Where are my trading view people? Odds favorable momentum, 4 triggers above, perfect pullback to an area inside of triggers, and all the money. 10K, are you serious? Did you really just walk into my room all nonchalantly and say, Mark, I saw the perfect trade. I saw the perfect trade, so I took the perfect trade, and I trusted the large chart all the way up to resistance. Ladies and gentlemen, that's your money shot from 29 to 36. 7 points. That's $700 worth of profit. Beautiful trade, 10K. Beautiful trade. Everything we teach every morning, the pattern that repeats itself. All right, Mike, entered at the HVA. Why? Okay, you sure did. You sure did. Took trade at the HVA, moved stop below second HVA, and it got you. What's this giant bar? Strong, path is clear, room to go, strong triggers. Mike, this is what I want you to recognize. Okay. Let me know if this part of the equation makes sense. Everything is strong. You're on the strong side of the triggers. I don't know what this blue is. I don't know if that's a zone or if it's trouble, but it looks like you're trading to that trouble. And then check it out. Small chart. Smalls are working above the large. Everything is up. buy the pullback to the HVA, make some money, and it looks like it hit your zone on the other chart. So how awesome would it be to just respect the zone and make $1,000 instead of giving back? I don't know. I don't know what that looked like in the moment. I love the trade. Everything says up. Everything is strong. Buy an HVA. Nicely done, Mike. Nicely done. Everything is strong. Room to targets. Buy an HVA. Pete, this holds. Triggers roll. Pulls back. Mid-band. Didn't want it. Mid-band. Didn't want it. Mid-band. Didn't want it. And Pete goes, wait a minute. I'm above everything. My smalls are strong. I'm on the good side. That is the sexiest darn trend trade I could ever take. It was at 1,000. Was it at 1,000 at the zone, Mike? It looked like it would have been, just based on like ratios. Was it at trouble at 1,000? It's hard to tell for me sometimes on the minute charts. On the 15, what a great exit, right? Could you imagine what that $500 means over the course of a trading year by just choosing to get paid? And I think this is one of the things that we forget. Giving $500 back on a trade because you hope an area breaks costs you $126,000 a year. I don't remember who did this calculator trick on me before, but it stuck with me because I was giving $100 back. I was giving $100 back by not getting out at areas. And I'm sure it was John. He goes, why are you giving back $25,000 a year? And Mike, and I say this not to try to tell you how to trade, but you're a freaking rock star, right? You're a rock star. Look at your entry. Get paid like a rock star. Come back. You know you'll find the next trade. Look at that. Perfect long money. Perfect long. Get paid. So yeah, to take half off. Give me just a second and we will cover that. I've got like 3 or 4 more pictures and then we'll knock that out, okay? Cool. And I want to talk about Pete's. And guys, we talked about this live. When we were coming from trouble, when we were above trouble, when the smalls were strong, when we were good, the market gave like 8 opportunities for a trend trade. And Pete said, it's still too strong. I'm cool. I'll wait. The market moves in patterns. Life is good. And then when his smalls get inside of the large and there's no momentum against him, that's when he enters on the close, on the correct side of the small triggers. And he just rides that large chart all the way up. And it's absolutely beautiful, Pete. Great patience on the entry. Really like it. Hunter, odds favorable momentum, clear path, pull back to the area inside of triggers, easy money. Where's that second contract? There's your entry. Did you make $100 on the first bar? I see one contract. Oh, did you get paid higher? Did you carry it to the fib, Hunter? With momentum and path? Because we're going to celebrate. You reached, okay, so you got your $300 target. You were in at 18, 28, 38, and you're still not out. Did you hold it for a bigger move? Beautiful trade, Hunter. Nicely done. I was just wondering if you were starting to get a little more out of these. You are so solid on following rules. All right, 8 ticks. I was a little early, my entries in that uptrend, but the strong momentum on the large chart decided to be my friend. So first entry is a pullback to the mid-band inside of triggers, and he gets paid. Second pullback was an attempt at a momentum trade that turned into a trend trade when it failed, and you got paid. Third attempt to go along with the strong trending market was a momentum trade that failed, turned into a trend trade, and you got paid. Nicely done, 8 ticks. Guys, the lesson from this chart, if your large chart is solid, if your large chart is screaming and there's nothing in the way, and you decide to take a momentum-based trade, and this is a good example, if you decide to jump in and the large chart is perfect, when it fails, very often it turns into a trend trade. And 8 ticks, you did a great job of understanding that concept, holding your position, and taking advantage of the large chart. And then finally, strong trending markets fail eventually, and it failed. Wrong side of the triggers. And it's just buy the mid-band till it doesn't work, and that was where it didn't work, 8 ticks. Mid-band long, strong trending market, mid-band long fails, no more long trades. Great job. 10K, saw your post on the Traders Chat. Please take a bit more time on it if you don't mind. Being picky about what to act on, not every twist and turn is worth pursuing. You are the victim of jumping around, changing time frame symbol, and so on. I'd love to elaborate. Would love to elaborate. So 10K, and for those of you that don't know, Novak men produce the worst analogies known to man. So what I posted in the room the other day, and let me pull this up, as I drop this picture in the room of a buffet. Guys, most traders, have you guys ever been to a buffet? I know you have, right? Everybody's been to a buffet. Most traders that I've worked with, that I've met, whoops, I lost my, there you are, there you guys are. 10K, are you in here? Most traders that I work with are fearful that that buffet is going to close. Even though it says it's going to 10 p.m., they're going to walk in and they're going to, have you guys been behind the person on the buffet that stacks their plate 8 entrees high, all the sauces are touching and running together, and nothing tastes like it should, right? Because they're afraid that other thing won't be there. They're afraid that the buffet will suddenly close. They're afraid that the owner's going to have a heart attack and they have to shut down. And this is what the market looks like to the average new trader. They see everything, every tick, every up, every down, and they believe in their heart of hearts that they are entitled to every fraction of every move in the market. And it's okay. It's because you know that each tick has a dollar amount, and how come I'm not getting all the ticks? The second picture that I put in there, guys, grab what you want. Grab what makes you happy. Grab what suits your needs. And if you run out, there will be more. If I finish my plate, there will be more. But what you'll find more often than not is that instead of having to make yourself sick on a little bit of everything, take what's yours. Take the best. And you'll find that it's usually more than enough. And that's kind of what the analogy was, 10K. That when you believe, and 10K, what market do you trade? You trade gold or something crazy like that, right? I want you guys to see this. Just the Russell. Okay. Hold on. Hold on. Not there yet. Still going. There we go. There's midnight. And what time is it? It is 10:53 a.m. on the eastern side of the United States. This is, I don't know, 23.7, hold on, 23.7, and the low of the day is somewhere 23.510. So it's 200 points. 200 points up and all the fluctuations inside. Help me out here. So 200 points times, is it $20 a point in the NASDAQ? is $4,000. And guys, it's $4,000 of straight line movement. Are you following me? There's another 3 or 400. There's another 5 or 6, another 3 or 4, another 5 or 6. All of these different moves within the move. Can we agree, just because we're surmising here, probably $7,500 worth of movement per contract, if you include all the fluctuations. Is that fair? Are you guys with me? Are you following me? 10K, $400 a day. Your steak dinner is 6 figures. $400 a day is a 6-figure income based on trading. $1,000 a day is $250,000. So in $7,000 worth of movement, 10K, you can take a recipe for perfection. You can take a pattern that's been proven to win more than it loses, and you can sit on your hands and you can wait for that pattern to come true. And that pattern is only 3 rules, right? That pattern is only 3 rules, 10K. That pattern only takes 2 charts to produce. So what do you think? Do you need every move in the market, ladies and gentlemen, to be a successful trader? So you made 13. How much does the Russell move? $5, 7 points. So 350 plus another maybe 150 there, 10K. $500 trade, is that right? About 500 on this one total, start to finish. So when I say something like that, you can tell me what the real answer is. 260. If that's the best you did every day, it's $50,000 a year, right? So 10K, is it worth the wait to find one more $260 trade? How much can you lose trying to catch every move? How much can you lose trading into areas? How much can you lose fighting trigger lines, right? Guys, the best traders that I've ever worked with do the same thing every day. They do the same looks, the same trades. So that's kind of my buffet analogy. 10K, you didn't load your plate. You waited for filet mignon, and you were rewarded beautifully for it. So that's kind of the expanse on that, guys. There is millions of dollars of movement in a market, and if you don't believe that you'll be able to find it, then you don't trust. You don't trust your plan. You're going back to basics. That's the reason you don't see me much in the room. You're done for the day. I love it. So 10K, you went back to basics, looked for less, and you're done by noon every day. Has anyone else had similar results when they stopped trying to find all of the trades, but rather started looking for the best trades? Did you find that you were making more money, that it was more effortless, that you weren't as stressed, and that the results followed? I don't think there's anybody in the room that hasn't had that revelation, but because we're human, we always chase more. Andy, odds favorable. Where did you get in? 6403-ish, 6403. So Andy, you are strong triggers, nothing in the way. You got in on the correct side of the small triggers with all that momentum, got paid a trouble, and when you had strong triggers in the snapback, you bought more and got paid again. Absolutely beautiful, Andy. Letting the large chart lead the way, finding a way on the small chart. Brian17, you translated the checklist into your language. Let me see what it says. I love it when you guys do this. Trade with momentum. I love it. Wait for 3 triggers on the correct side of resistance or support. I love it. Are the scissors open? Those are the same. Does that make sense? Those are the same. I love that you did this. Is there room to the next support? Love it. Trade on the pullback to the large trigger. Where? Why? Which? Huh? Amen. One of my favorite things is when you guys show me your plans. One of my favorite things is when you guys share this with me. So let's try this. Strong triggers, you've got it covered. And guys, it has to make sense to you. So I love it. Room to targets, same as no terms. I love it. What a solid plan. And Brian, what a great approach. And now this is where it gets iffy. And I want to show you what I mean. Trade on pullback to large trigger. Hold on. I'm going to open up 2 charts. Am I pulling back? Am I trading here on this large trigger? Am I trading from the top of this large trigger? Am I trading from the bottom of this large trigger? Am I trading from the bottom of this large trigger? Am I looking over here on this chart to try to trade the top of the large trigger? And so one of the things, guys, that really pays dividends, and this is in the beginning, right? Because we all begin to assume the smarter we get. You could use the language where you say, on large chart, I need strong triggers and room to targets, right? On small chart, and this is my favorite phrase in all of trading, I will buy or sell a pullback at an area inside of triggers. My stop will go 5 ticks below or above my large triggers. And now it's specific. Now it is, I have to have strong triggers. I have to have room to make money. I need to buy or sell a pullback at an area inside of triggers. And 12 is an arbitrary number, right? What if 5 ticks below or above the large triggers? Brian, what if it's only 6 ticks? Why risk the other 6? What if it has to be 15 ticks to put you where the market shouldn't go? Then 12 just isn't enough, and 12 might put you right in the danger zone to get stopped out. I like that the language works for you. So I'm not trying to knock anything that you're doing here, but let it be specific. Like, let it be just to the point to where you can't mess it up. So I need strong triggers on the large chart. It's either yes or no. I need no termination conditions on the large chart. It's either yes or no. And I need an area inside of triggers on the small chart. It's either yes or no. And that's your high probability trend trade, right, Brian? So the 3 triggers through is that 50-50 trade. And the entry rules are different. And the management will be different. So as you guys write a plan, when you start to break out of mine and you use that language, make sure that you're following those core concepts a little bit. Great job, Brian. The fact that you took the time to write that out, there's zero question about your commitment to finding success. All right, 15-minute chart, large triggers up. 1 minute chart align in the entries at the HVAs. So you're in right here, Crowbar? Or are you in down here? You're in down here. Is that your first arrow? Awesome. I want to show you something cool, Crowbar. And guys, this is for me. Let it breathe a little bit, right? Some of you love to see what happened yesterday. Some of you love to see what happened at 8 a.m. If you take your pictures and let it breathe a little bit, you can see triggers, you can see bars, you can see closes, you can gauge what the momentum was. So at 23,656, 23,656. So down here, we're coming from a termination, small triggers rolled, everything is strong, you're above the one-to-ones. Did you buy? It looks like you bought on a white bar. It's hard to tell, Crowbar. I apologize. And it looks like you sold, and it looks like you sold, and it looks like you sold, and it looks like you sold. So you got in when things rolled and everything was strong and just rode that bad boy all the way up to trouble? Am I reading that right? You waited to not fight these triggers. Did you buy? You didn't buy this HVA area. It wasn't there. I see your buys right here, but I don't see HVA areas. I see the buy before the HVA area here. Oh, I know what an HVA line is. So let me show you my confusion. And it's probably because it's so squished. So here's your HVA. There's your buy before it was created. Does that make sense? Here's your HVA. There's a buy in between the two. Okay, and I reserve my right to be wrong when it's difficult to read. Are these not entries, the CC buy, CC sell? I'm learning to read your charts the same way you're learning to present them to me. So I love the patience that you guys give me sometimes. So with the strong triggers, you bought the pullback right here at 23,660. Okay, disregard. Thank you. I needed that, Crowbar. I appreciate that. I love it. Zone reached. Everything rolls by the HVA. That's perfect. It's rock star. It's great. My problem is I distract easy and I started looking at everything and not the important stuff. So one more time, just for my clarity. Zone reached. Smalls above large. Buy the pullback to the HVA. Make more money than you can spend today and get out of trouble. Does that sound right? So let me just, one more checklist. Hold on. Zone reached. 1 minute triggers roll. Buy the pullback to the HVA line. I'll be darned, Crowbar. You followed a checklist and made all the money. Nice trade. I love it. Sorry, it took me a minute to come to terms with everything that I was seeing. I apologize for that. That happens sometimes, guys. And just fair warning, there will be times when I think you went short when you actually went long. Just correct me in the room. Just go, no, Mark, I went long, not short. Don't listen to me go on about how you were fighting everything. I've done it. All right, Hunter. Let's see what you did, my friend. I love the trade, Crowbar. It's awesome. It fits the rules perfect. Fits the rules perfect. Odds favorable momentum. 2 triggers through. Thought it was 3. It was probably peaking. No divergence, but it is weak triggers, not strong triggers. Perfect entry. Stop makes sense. Hunter, you want to see something? I'm going to open up the KISS plan real quick. And I don't think that the 3 trigger 2 trigger thing I would be willing to bet that in the moment, because of the push, that trigger line was probably peaking above. Is that safe to say? And beautiful, beautiful, strong bottom. Awesome momentum on the large chart. No divergence on the small chart. So your only no on this one, Hunter, your only no on this one was smalls outside of the large on the small chart. Do you see that? And there's your weakness. And it's still a great look, dude. It's still a great look. This is where, when I go, man, I've got 3 out of 4, right? I've got 3 out of 4. Life is good. But that one is weakness. And guys, this is a lesson for everybody. I enter at the highest point on the high probability trend trade because the large chart is perfect. Weakness in momentum could push a little lower. And that's one of the things, once you get outside of high probability, this weakness, the reason it's one of the rules, Hunter, is because I am 100% focused on having the momentum that I need to alleviate my clear path problem. Does that make sense? So this is one of those little safeguards. It's still, I would say, like 98% the perfect trade. One of the things you can do when you're like, man, it is every star has aligned but one. The idea of using a reversal bar for entry, Hunter, having some place to minimize that risk a little bit isn't always a bad idea. So it might be something that you want to explore and do a little study on and see what it says to you over a little bit. But without that momentum, I'm missing one of the components that I'm hoping breaks that area. It's okay to force the market to go in the direction of your trade. Gary, I guess if you put enough dots on there, everything's a reversal off the high. Let's look at it. You had a high. You're welcome, Hunter. Trend is up. Smalls are up. But it did reach a termination. So from the termination, smalls, I'm assuming, get below the large. I don't see any large triggers. Pulls back to the HVA. And down it goes. I don't know. I think I read that right. There's room for a few more dots. David. So Gary, if you had a termination here, you said that the market is coming from, I mean, the market is always coming from a high, right? If it's going down, it came from a high. That came from a high on the small. That was a high on the small, right? Did it come from a termination? Did it come from a zone? Did it come from an area? And let me show you what I mean. This market just came from a high. There it goes. But was the high a termination? Was the high a zone? Was the high one-to-ones? Was the high a VWAP? Was the high a divergence high or low? Well, it would have been a high, right? So because it's not coming from something, the HVA trade is off the table. That's okay. I'm just going to use my chart. So let's go back and look again. So the market starts pushing down from outside of the outer bands. That makes sense, right? I get to the weak side of the small triggers that are up. So it's going to be a little tougher to take a long trade. which means that I have to let my smaller chart agree with a long trade. Trend is still up, momentum is still up, everything is still up. This HVA line at 85 is okay. So here we go. Weak side of the triggers, which means that longs are going to be more difficult. All the momentum on the small chart to the downside. No, this is up here. 98. No, that's the other one. Okay. I'm just trying to talk through it and help you with the large chart read. The large chart is up. He may not even be in here. The triggers are up. The price was trading in the transition phase of the triggers. Everything says up on the large chart. You do have momentum down on the small chart. So really what you're doing is you're going counter trend, looking for the short to the potential long. Does that make sense, Gary? Does that make sense, everyone in the room? If you're taking this short when the large chart is giving you no indication of a short, what you're doing is you're hoping that this short pulls you back to a mid-band, pulls you back to a zone where you can capture a close on the correct side of the triggers to continue with the underlying trend. And there's nothing wrong with the trade. You have momentum, you have HVAs, you have areas. It's just a momentum trade. These are the ones where I just say that probably not your home run. And then when you go back and look at Gary's chart, he knew that it wasn't a home run, and great exit. So Gary, I dig it. But the large chart is still very much up. The large chart is still very much in an uptrend. It's very much odds favorable momentum. But because it's on the weak side, it gave you a fighting chance to take the short to the long. Make sense? And Claire, you're saying because it's on the weak side, wait for the close, right? Don't just jump in. Don't just jump. Stop it. Don't just jump in at a zone hoping it goes up. Come on, TradingView. Don't just jump in at a zone. Don't just jump in at a mid-band. Don't just jump in at a zone. And that goes back to, for those of you that are in TradingView, if your small triggers, and Gary, this is a good lesson. You'll dig this. If your small triggers, that's the wrong one. Sorry, ladies and gentlemen. This is in the spreadsheet. If the small triggers turn against you, just what Claire was saying, that's your patience piece. Let's get to the good side of those small triggers, give ourselves a fighting chance. And Gary, this is what you did on the small chart. If it has strong triggers and it pulls back to that zone, to that HVA, sell the hell out of it. Take the short, take it to trouble, right? Great job, Gary. Guys, sometimes it takes me a second to translate your charts. Everybody sees things differently. Some of you, it is smooth as silk, less is more. Some of you like to see more. There's nothing wrong with either, but sometimes it takes me a second. Smalls are down, large are up, dissecting a fib, everything's going sideways. Sit on your hands. Nice job, Pete. Nice job, Pete. Cav, how are we doing, guys? Are you learning anything today? Cav says, strong triggers, potential to break, pull back to the area inside the triggers, support holds, off it goes up to the fib, let's make some money. That sure looks familiar, Cav. K Price. I don't know why it's so fun to say K Price. So K Price, I'm going to put the same request into you that I give to everyone else. That's so hard for me to read, to see what's going on. And I want you to see, you gave me 75 acres and a mule, and we're only focused on this one little box and all that space. Guys, when you post in the room, show me what's happening. Make it easy for me. Make it easy for you. But you know I'm going to figure it out though, right? I just have to see what you did. I lost twice at these areas to go long. What did I do wrong? Well, let's look at it. K Price, are you in the room? So just to satisfy my own smart-ass nature, I have to say this. Why did you go long? You lost because the sellers won. That's why you lost. But was there an indication? So I'm going to go back and I'm going to go to the chart that we can read. And we'll talk about, were you listening to everything that we just talked about? So here's your first long. Right here. No worries. So we're going to focus on this one right here, K-Price. This will be our first chart read. Will you play along with me? What direction is the trend? It's up, right? You knew that. That's why you were looking for longs. What direction were the small triggers going? Let's draw our imaginary line. The small triggers are up. And K-Price, are you comfortable with the concept that this would be considered the strong side of the triggers to the left side of the triggers? That's when you have the best of the best. Inside of the triggers is what we call a transition phase, and you just want to make sure everything's perfect. And over here, where the market was trading, we're on the weak side of the triggers. Does that make sense? This is my large chart read, so it's weak. So still looking long, but I should probably avoid, because I don't give trading advice, fighting the small chart. Don't fight momentum. Don't trade into zones and areas. Does that make sense? So that's a great chart read. You were 100% in line with the direction. You knew that you were above trouble. There's nothing in the way, and life is really good in that scenario, okay, Price? The challenge is where you took your pullback. So the rules for entry say when the small triggers on the 1 minute are against you, wait for a close on the correct side to have that advantage of not fighting immediate momentum. And there it goes off the side. So when the small triggers turned against you and they're coming down with strength, what happens is it's very, very difficult to beat those triggers. It's hard to win that fight. Does that make sense? Awesome. So that one, what went wrong is you fought the 1 minute chart. And I want you to see something pretty cool. When it came to the lower zone, still in an uptrend, still above trouble, still above everything, there's your close above the small triggers, not fighting anymore. And that was your first push up. So a little bit of patience. Now on the second trade, let's see where you went long on that one. Right at 405, and this is the ES, and we're even looking at the NASDAQ, but the lesson is exactly the same because the picture is exactly the same, so much so that I didn't even recognize. And look at that. Even on the ES, it did the exact same thing, right? Once you get on the good side, it goes up. All right. So your second long, let me see where it was. 6405. 6405. Right. So this was you right here. And let me make sure that I'm in the right spot. Timestamps. Maybe I can line the timestamps up. Right around 11:16. Oh, nope, I can't. Yeah, there we go. So nope, you went long on the first push. So you were long right here. All right. Let me make it so that it's a little more visible over here. You got in at the bottom and you got out there. You said that you lost twice at these areas. If you got long at the bottom, you lost here. It's okay. Little clarity goes a long way for me. You lost at 110 for the pullback. Where did you enter? So you went long here and you held the trade all the way down and lost here. Do you see how I'm a little confused? I can't see entries or exits, and this says that you lost twice. I assume that you lost a long trade here, trying to go long, and you lost a long trade here trying to go long. So you entered here and lost, yes? And we discussed that one. We're good on that one. And you entered here and lost, yes? Okay. So what happened here? Let's look. That's this right here. Do you see it? I don't know where you went long. So let's do this and help me out here. Did you go long here and end up losing the trade? Take care, Cav. Did you go long here and end up losing the trade? Did you go long here and end up losing the trade? Where did 1, 2, or 3? Help me out. Or maybe you went long here. Okay, so you went long right here on the pullback. Okay, and you lost the trade. You gave all your money back over here. Awesome. So K-Price, the first thing I want you to take from this lesson is make my life a little easier. Tell me what you did. So at 11:15, let me make sure, because now we got this, right? Now we know. Now we're there. So here's our bar. Right there. Good looking entry. What does my large chart say? My large chart, and we're going to go through this. My large chart is still in an uptrend. That's the first question I ask. So you're thinking long trades. But now that it's the second question, K-Price is, do you see how the small triggers rolled against your trade? And do you see how you are on the strong side of down small triggers? And this is one of those 15-minute things. The 15-minute chart is a little slower to show change. So we're looking at those small triggers. So what we are, even though it's an uptrend, we're on the strong side of down triggers. So if I'm looking to go long with trend, I need to not fight, and I'll have to manage. Is that fair? Does that make sense? So if I go long with the trend, room to go up, everything, I might have to put my management hat on. Your entry was rock star. Pull back to the zone, closing on the correct side, life is good. Sound good, K-Price? Am I following your thought process? All right. So here's the question. With small triggers down, being on the strong side of the small triggers, K-Price, did you see all of these things that could screw up that beautiful trade? And this is a common mistake with a lot of people. And it's just normal. It's a normal part of trading. So if I got into this trade It's 6402.75. I had two I had a little over 2 points. I had a little over 2 points to get to. So I had about $100 worth of profit before I hit something that stopped the market. And that's cool. But you asked why, and I'm telling you. And now I'm telling you that you'll focus on this next time, K Price. You traded with the trend, right? But you fought, you were on the strong side of down triggers. I want that to be your cue that this is probably not a home run. Because these are down. And you're on the good side. You're on the business side of strong. So when you take this long trade, you're going to look for reasons that the market may stop. And you had about 2 points to get there. And it's sure enough, it held, and it's pushing all the way down. And these triggers keep getting stronger. So if you tried another long, you have to believe that this mid-band is problematic. You have to believe that you're fighting the immediate momentum. And maybe long trades need to be off the table even though the background is green. Does that make sense, everybody? TradingView? Let these small triggers on the large chart really drive your decisions. The green background is a huge, broad stroke. These tiny triggers, and I even told John Novak, I feel like you could lose the large triggers on this chart and use these small. And as long as you're on the good side and going with that direction, life is pretty easy. K Price, does that help a little bit? You took a beautiful entry, just needed a little management help. And then the lesson here is it's hard to win a fight against those triggers. Thank you so much for posting. And I'm sorry, guys, when it takes a minute for me to get to where you are on the chart, use that a little bit to go, okay, let me draw some arrows for entry, right? Let me talk about what I saw, because K Price, once I get in your head and I know what you saw, and this is so important, guys. This is where annotation comes in. And I'm just going to give a quick example like this. So if I posted in the room and I took a short trade right here, if I write on my chart, strong triggers, clear path. What this says to whoever's running the room. So Dip, you're running the room. If I posted this chart with this loser, do you think that there's 2 lessons you could give me that could help me avoid that loser? So what I'm telling you is this is what I thought that I saw. This is what I thought I saw. And then the lessons come in. Well, let's define momentum, right? And let's define a termination. So guys, if you omit the Y's on your chart, I don't know what you were thinking. I have no idea what you were thinking, which makes it really difficult for me to help fix any challenges that you're having in your reading. I hope that makes sense. Thought entry was incorrect direction due to 15-minute having hit a zone and exited. I stayed. If I had stayed, and if a frog had wings, it wouldn't bump its butt when it hopped. Second trade at HVA, I thought maybe the market really did not touch the zone on the 15-minute, or it did, but would retest the bottom zone. So much for thinking. So let's see what you did. The first long fights everything. Strong triggers directly into the VWAP. So Paul, do you see the white line? And you see it over here too. That's your VWAP. That's a termination, 100%. 100%. And you're also downtrend, right? Everything says down. It's going to be hard to go long. It really is. And then it turns and you don't have momentum because the large triggers are up. And I'm not sure. And it dances with the smalls down and the large up. It dances, it dances, it dances, it dances. And eventually the large go down and you close below the small. and that's probably where the continuation started down. Two shorts, no long. So your first short fought strong triggers. No HVA lines. You mentioned the HVA line. Okay, there's your HVA line. From the termination, smalls below the large, HVA. Okay, I could get on board with that, Paul. It's hard to read. Guys, don't be afraid to stretch out that large chart for me. So termination on the large chart, everything says down, strong, pull back to the HVA with the smalls below the large, and it just didn't work, Paul. This one 100%. This one fights. Sorry, it took me a second. This one fights. This one, it fits a plan. One shot to go with it. They just had to dance a little bit is all it was. Good stuff, Paul. Thank you. There's just no reason to fight triggers. I haven't won yet. And believe me, I've tried. In the dip, could you go short on the pullback in the early example at the HVA? Man, I'm sorry. I wish I'd seen that in the moment. Let's go find out. It was NASDAQ, yes? And you're talking about right here? Where Gary did it, dip? I want to make sure that we're talking about the right spot. Were you talking about that pullback to the HVA? No, KP. Hold on. Help me with KP. Oh, K Price's chart. Okay. K Price's chart. So on K's chart, could you have gone short at the HVA? First one or second one, Dip? This one or that one? First one. So let's look at it. Let's go look at it on an easier to read chart. This HVA or this HVA? Let me look at her chart one more time just to get a price for it. That first HVA was 64.05. That first HVA was right here. So here was the first HVA. Let's put a box around it. I'm going to say no right off because you never got a pullback to it. And this HVA line, let me show you how HVAs come to be. When this white bar went down and it was confirmed by this down bar that closed all the way down here, that's when your pink line came in and it never pulled back to it. So there's really not a trade off of that HVA because it just didn't materialize in time. Does that make sense? And now on the strong side of small triggers, when it pulls back to that HVA, when it pulls back to that zone, and you get a close on the correct side of the small triggers, look at what it looks like up here. Let me figure out where that box shows up on my large chart. Over here, smalls are now down. Strong side of the smalls. That HVA does come into play because that's the line in the sand. And sure enough, right at the zone, right at the HVA with a close on the correct side of the small triggers, that was the first big try to push down. And then they tried to retest at the same area. And that's where they failed the second time. And that's kind of what started the push down. And now with the strong side of the triggers, everything down, it pulls back to the mid-band, closes below for the trend trade, and it is still going down all the way to the VWAP. Do you guys see it? The small triggers told you no more longs. And that was your trend trade to go with those small triggers, and it looks like a pretty good one. Good question. It just didn't show up in time to really use it. Odds favorable momentum. Nothing in the way. Jump in above trouble, get paid before trouble. Steve, perfect using the chili dog mentality. Strong triggers down, nothing in the way. Just jump in, get out of trouble. Steve, perfect. Momentum and path, guys. Momentum and path. I love momentum and path. All right. 8 ticks. Oh, I like this one. You ready? 8 ticks. This is going to be a good lesson. Let's look at your large chart first. Your large triggers are nothing but down. Do you see it? Red is a beat, angled down, and they're angry. Your small triggers, well, they're going up. They did get above. That's what created the green background. But when you talk about momentum, and I know that you count on momentum a lot, in order to have momentum, they have to be going the same direction. And they really have to be the same color. Does that make sense? So the large chart momentum wasn't there. And that's okay. Your small chart, what it did is it sucked you into the siren song. You're like, whoa, it's a pullback. There's a mid band. I see a trigger there. But there was another thing going wrong with this trade. Do you see how price reached Fibonacci resistance? And your triggers were 3 days below that area of resistance. So you have a brick wall and no momentum and just a little bit of hope. And they did try to push back up, and you got away with one. You really did. You got away with one. And then it looks like it kind of did everything that you would expect. Man, sometimes it's luck is on our side. Because the reality is guys, we will all take the perfect trade. We will all take a trade that is the most amazing recipe for success. And it will whip us instantly. Instantly. And then sometimes you'll take the trade where you just can't even find something to be excited about. And it'll pay you handsomely. So it's not the wins or the loss, right? It's not the I made this money, I didn't make that money. It's the, man, is it repeatable? Is this going to get me money every day? Is this going to give me the highest chance of success every day? So I love it when you guys get a little lucky. And man, with the strong triggers on the small chart, you got just enough bounce. So sometimes I have to tell you guys that, and not everybody receives it as well as we would like. Once those triggers rolled, guys, TradingView users, give me a yes if you see it. Once those triggers rolled and we got to the business side, it's been Downsville, population U ever since. Pretty awesome, right? Yeah, Gary says you just say okay. If you don't like what I have to say, just say okay, I'll shut up. I know that means shut up. Exactly, Mike. See how they rolled? And David W., the background's green, but the smalls are down. And guys, as long as I am below those small triggers, I'm on the strong side of a vicious push down. And this market hasn't blinked, hasn't changed its ideas about that. One of the greatest lessons, guys, let your small triggers, once they rolled, look at it. It's been all down. Pretty cool, right? The 15-minute, if you're a Renko bar, if you have changed from Renko to minutes, it is an absolute Jedi mind trick at first, because you're like, I've got strong triggers up. I can only go up. But guys, it is so slow on a 15-minute. I wonder if you could get rid of. Let's try it just for grins. On a large chart, no, that's not it. What if you got rid of the large triggers? Okay, so guys, this is for grins. I'm not telling you to get rid of your large triggers. But let's do that first thing in the morning lesson real quick. And tell me what you think. Maybe a good safeguard. As long as those triggers are up, I'm either strong side, I'm either transition, or I'm weak side. Once the triggers roll down, I'm either strong side, transition side, or weak side. Pretty cool, right? I like that concept because it's just such a slow chart. And my brother loves the large triggers, and his are on there. But everything I do is okay, where are my small triggers? What are they doing, right? They're down. I'm on the strong side. Dag nabbit, there's something in the way. I've got a VWAP. And look what it's doing on the 1 minute. But as long as I'm on the business side of small, there is a pullback to the HVA with strong triggers. That was your shot at the short. Beautiful. There's your close below the small triggers at a mid-band, kind of a trend tradey look. There is, let's see if there was another one. Strong triggers, strong triggers, strong triggers. Pull back to the zone. There's your momentum trade. And that carried you all the way to the VWAP. So with the small triggers down on the business side, there's your first shot. It's actually right at the HVA. There's a potential second shot. There's your momentum trade. And that's your whole day, guys. That's your whole day in 25 minutes. Does that help a little bit, TradingView people? You've got to stop thinking like Rinko. That was a lot of money. Oh, that's your target. I was like, man, you're killing it. And Mike, I don't know what you're doing. Chart froze entry HVA of white bar. So you went long. Is that right? You went long. And it froze up on you. 15 chart has been distracting you. K price, does that help a little bit? Focusing on the small triggers? Good, good. That's what I'm hoping for, guys. Every day something clicks, right? Every day something clicks. Mikey, I got you. I got you. And that's kind of what it does, is every day it clicks a little bit more. Guys, there's the TradingView journal as well as the plan. So you went short at 23,652. Mike, do you see how I have no freaking idea why, right? I have no idea why. Why did you go short at 23? Was it 52 right here? Is this your entry, Mike? Let's get some of these off. See if we can't get a little more Pacific. Help me out, Mike. Is that it right there at the HVA? Okay. So I know you don't want to do it, but how about if I do it for you? And it's okay. I don't mind. So we won't even talk about the background color anymore, guys. Smalls are down. I'm on the strong side of the smalls. Go down with it because there is nothing in the way. Is that a good read? What do you guys think? Smalls are down, strong side of the smalls, and I've got nothing but green skies. Green skies. Until I reach something bouncy. What does the 1 minute say? The 1 minute says strong triggers. And I don't know how you got into that one. Was the HVA already there? The HVA was there. So you had strong triggers and pulled back to an HVA, and it was absolutely beautiful. Is that right, Mike? Did I get it? Everything says down with nothing in the way. It breaks down with strong triggers, pulls back to an HVA, and it's just giddy up to the downside. Beautiful trade, Mike. Nicely done. And it fits the plan 100%. You guys have a checklist for this. You're looking for the templates. Oh, I got you, Mikey. Sorry. The POC. Help me with POC. Point of crisis. Pretty old crusader. Hey, Mikey, there you go. And I'll show you how to do it. You need the ES and oil. So what you're going to do, Mikey, is just click on the link. Oh, I hope your dog's better. Point of control. You're trying to figure out. So when you say you're trying to figure out the point of control, you guys really believe I'm smarter than I am. Hold on. You're saying point of control. Point of control. Chart froze over the point of control zones. Is that the point of control? The language is new for me. Okay. Is that one of your zones? I'm not sure what that is. Is that a zone? Is that an indicator? Read the link above. Well, how can I give you answers if you have to give me? Okay. What's the question? Let's repeat the question so I can find the answer. Can you go over the point of control zones? Here you go. You're going to get a more accurate answer, Mike, from the Chart Prime website. These are their indicators. Here's all the documentation. You're going to get a more accurate answer from the research and the time that they put into the answer. I would encourage you, because I don't have one, anything that I did, Mike, I would have to Google, I would have to go through, I would have to find it, and then I would have to find a way to say it to you. I believe it's in the dynamics. I believe it's in the futures. I don't know what a fair value gap is, though, Mike. I wish I did. I'll probably Google it. I don't know what that is. And I apologize that I don't understand exactly what that means in regards to it. But Chart Prime's not my indicators. And point of control is new terminology for me. Cool. And let me go to the other side of that. Right on. It's on John's chart. I would post in the other room and ask John. I don't have any orange spots on my charts. I've got red and green. And that is from, is it red? It looks orange. It looks orange. And okay, so that's red. It's just the black background. It's a zone at 661. At 661. Where was it? 661. Well, they may have shuffled. These are all zones. These are all supply and demand zones, Mike. Every one of them. Okay, you changed it. So it's not a zone. I don't know, man. Did it behave as a zone? Hold on. Let's try this. So, Mike, do me a favor. And I'm just, guys, we're spitballing here. It looks like a zone, right? And maybe it has a different name. Did the market react to it? What do you think? It looks like it did. So I'm going to go back and I'm going to use my right side brain here because I'm definitely not an engineer. So the market traded down and hit whatever you want to call that. And it bounced up, right? And it tried to come back down and then it bounced up. And then we got a little more scramble. And then finally it broke and it went down. Again, doesn't do me any good. Guys, let's look at it from a logical, pragmatic, what did that orange box do? No matter what it's called, no matter what it creates, no matter who programmed it or who uses it, that orange box created a reaction in the market. Does that make sense? And I'm going to oversimplify this, guys, because I'm not the sharpest tool in the shed sometimes. I can say without hesitation, without reservation, that trading directly into that orange box may not be my highest chance of success. It may be a great spot to take profits, but once I get below that orange box, which seems to create a little indecision in the market, it's freaking rock star to the next zone. So what can we surmise about the orange box? Somebody's reacting to it. Does that help? There you go, Todd. It sounds like the orange box is a place that could stop the market. I will use that orange box for profit targets. I will use that orange box for momentum trades. And Mike, I apologize. I know I don't have the answer that you're looking for. But if I go back and look at how the market reacts to the orange box, it really does kind of tell me what I need to know, I think. But I would encourage you to post it in the other room and ask John Novak, John, what are you doing with this? Because I've just never seen it. I've never seen an orange box on my charts because my workspace is literally direct from here. So I apologize. A lot of you guys have more than I have. Look at Gary's charts. I couldn't begin to tell you what all this shit is. Pardon my French. Couldn't begin to tell you what this stuff is. Gary knows. There is no momentum up, Gary. Your triggers are down, right? You're on the strong side of down triggers. Where do you see it? Am I missing? I don't have any orange. Mine are 100% red and green, Mike. I promise. I have never seen an orange box on my charts. It doesn't mean they're not helpful, but I don't have them. And you can keep showing it, and you can show me this all the time, all the times you want. It's not a part of the workspace. So maybe there's a POC in here. There's an FVG. There's a POC. It's red. Okay. It's a zone. If I take it off, I didn't see anything go away. If I put it on, maybe there's nothing there. So if I put, so Mike, if I paint an apple orange, it doesn't make it an orange, right? It's still an apple. If I paint a grape purple, it doesn't make it a plum. So You took a red zone and changed the color, and it sounds like you're trying to find different meaning now that the color's different. When before your change, it was just red and green zones, right? So you made it harder than it needed to be, I think. Because if red and green zones can stop the market, painting them orange doesn't change their role. And I hope I'm not coming across as confrontational. I can change my background to black, and it doesn't change that my triggers are down. Maybe change it back to red so it's not confusing. Did I click on all the links that show that over and over and over? I can't change my answer if you keep showing me the same thing. Gary, coming off the zone, triggers roll, strong triggers. I don't know, Gary, you don't have large triggers to define it as a strong trigger. I'm assuming it's a strong trigger. So you bought the zone. Nicely done. Guys, it's your right to alter your charts. It's your right to change your time frames. It's your right to add a million things to a chart. But if you want me to help you with feedback, tell me what they mean. You asked John about removing it on the 15, large triggers on the 15. He said he has to keep 2 sets of triggers to keep the background painted. Yep. And that's it. So when you get rid of them, smalls can't go over the large to paint your background. But does it matter what color the background is, Paul? Watch this. What direction are your small triggers going? Up or down? And here they're kind of flat, right? They're down still. You're on the weak side of down. That's it. If you're going to look for a long trade, you better have that momentum, right? If you're going to look for a long trade, you better have that momentum. Shorts are going to be difficult. And you don't need the background color for that. And I apologize, guys, if it sounds like because I don't have the answer. It doesn't frustrate me, but I don't know. I don't know. When you guys change things, it's difficult for me to have the answers for the indicators that you've added to your charts if they're not indicators that I am familiar with. But since I changed up my charts, guys, one of the things you can do if you ever make changes and you want to go back to normal is click on it. Hey, take care, John. Copy it. Click copy. It's not copying. Oh man, it's giving me a weird thing. Save it. And you can go back in and you can get back to factory settings just like that. And you can put everything back to normal. Mike, change it back to red and see if that makes it easier for you. That might be the option. I don't know. All right, guys, it's noon. Let me get you